Okay, good morning, everybody. Welcome to day 3 of the Tom Williams mentorship course. I've got some special guests with us here today in Worthing in the south of England. Obviously, I'm here with the master, Tom Williams, who's been studying intently the Euro chart at the moment because there's been some very good principles that tie in nicely with what we're going to teach you today. I'm also joined by a professional Forex trader called Matt, who lives just down the road, very close to Tom. Has become a good friend of Trade Guider, and Richard and I have met Matt, and he's going to talk to us today about what happened up here and why the market fell. Very good trade there. I think Matt took short somewhere up here. Yep, so he was short on that. And then we've got Rita Offen, who is a specialist in the upthrust, and I mean it in the nicest sense, Rita, sorry. But she does trade very successfully the VSA principle that we learned on Monday. And, you know, I know when Tom talks about Rita, I'm sure he'll say a few words about Rita in a minute. He always says, well, she's just a housewife. But I can assure you, my wife at the moment is in America with the 2 kids. And if I said to her, well, you're just a housewife, she would kill me. So Tom better be very careful today about the word just a housewife. My wife is working 16 hours a day at the moment, you know, trying to look after 2 kids and get it packed up to come over to the United Kingdom, where, of course, I'm now living because we're opening a hedge fund over here in Wales. Okay, so let's look at this Euro chart. Now, what do we have at the top? Can anyone tell me what is going on up here? Anyone got any ideas? What do we notice about these bars at the top of the market here this morning? Okay, this is in the London session, when the London session opened. Now, I've put the trend clusters on here as well today, because they're important, and we're coming into a trend cluster right now. Oh, well done, Lance. Very good. Very good. Yeah, Lance types in, there's no result from an effort to rise. Well done. The result is horrible. We see the first bar pushing up through the resistance line, and the volume is actually pretty high compared to all the other bars behind it. So they've marked the price up. But then it sticks in this trend cluster that was appearing, and the next bar, we get a very clear idea. It looks like an upthrust. It is an upthrust. The software sees it as supply entering the market because we've got an effort to go up, but the result is the closing price on the low of the bar. So it's our warning, it's our telegram from the smart money that something's not right here. The next bar, though, closes slightly higher. And you see this happening, but again, the volume is still pretty high, okay, compared to these other bars. The very next bar, we have a high volume bar, the highest that we've seen. But look at what happens to the price. It closes almost level with the very next bar. And then finally, this happens. Can anyone tell me what we call that bar? Anybody tell me what we call this bar here? And I'll just give you a clue. We'll draw a nice line under here. What do we call that bar there? They all know. Gotcha. Yeah, that definitely is the gotcha bar. Here's your support line. Yeah. Oh, everyone's awake this morning. That's good to see. You've got 2 of them. And then you've got a failed test. But do we spot Yao Ming anywhere? Does anyone see a Yao Ming bar now on the volume? And if so, where do you see it? Where does Yao Ming appear? Have a close look. Where does... yeah, you're all picking it up. There is Yao Ming. And what happens to price? Does it continue to fall? Or does it start to get accumulated at this price? Now, this is exactly what happened with the Australian dollar yesterday. We're looking for potential accumulation, but there is an opportunity, I think, here for this market to fall further. Now, there is, however, danger in this chart to go short at the moment. And the danger is we've got a spring set up. Lynn said, oh my goodness, I'm truly understanding this. Thanks. That's good. That's why you came on a mentorship course. The whole plan is that you understand this, Lynn. By Friday, you'll be experts in it in your own right. So let's bring in Tom Williams now, and I'll put up 20 bars here, and he can explain what is going on these 2 bars here, this bar here, and why the market has yet... Now, do you all agree with my statement that at the moment, this market has not changed behavior? It's still in a downtrend. Do you agree with that statement or disagree? Do you agree that the market's trending down according to the software? We've taken out prior support here. Okay, good. Everyone agrees with that. So we are in a long-term downtrend, and I'm going to show you what I see. Because this setup that you see here knocked the market sideways yesterday for quite a long time, as you can see. You can see the euro went sideways, and then it's been marked down further. Is this the turning point for us to try and go long? Let's have a look. Let's see what Tom thinks. Here is, everyone, Tom Williams.
Right. Have you got this chart up, Gav?
I have indeed.
Okay, good show. Yeah, because, as I've said, because Matt was coming, I started seriously looking at what was going on in the currencies, and this one jumped out here, you know, for Matt, obviously, will know all about this. But anyway, right there, we see the principle that we spoke about in the last 2 days, stopping volume. Right, is that clear? You got mark that, Gav?
Yep.
Right, now there's 2 bars there. The first widespread down, if you look at it, is really, really high volume. Right, and the next bar, although it's a red bar, it's closed on the high. Look, and note the spread is narrow. All the effort to go down has been removed because you're looking at stopping volume. So one or more professional groups have decided that now's the time, because the market has fallen behind you, it's vulnerable to a possible up move of some sort where they can make some money. And that's them entering the market. They're very, very clear. Okay, so, right, now what we really need now, as we told you, it's all very well having stopping volume, but we need to see a test of some sort to confirm that. Okay, so the market goes slightly sideways, look, no demand. These, of course, there'll be no demand, right? There's a little test there. Okay, green arrows come up. There's not much supply on that. That's fine, right? No demand, but we're still looking for this test. Now, right there, look, is what Wyckoff called a spring. I don't normally call it a spring. I call it a shakeout. What's this software say, Gav?
It's test.
Eh?
Sinus 22 test.
Right, it calls it a test. I mean, it's all very well saying a spring, and there's nothing wrong with that terminology, but I think when I was typing all this stuff in originally, I thought, call a spade a spade. That's really a shakeout. And they do that just before the up move.
See you later.
All right, thank you. Somebody going. Right, okay, so as soon as you see that, and you see this stopping volume in the background, you know they want to take that market up. Right? You can almost bet that's going up. Next bar is up, responding to that. However, the next 3 bars have drifted down. But as long as the volume's low, so there's no selling pressure on the downside, you would expect higher prices on this euro later on in the day. So there's the principle. We saw the stopping volume, right? It churned sideways. If you look at those bars in detail, right? Some of them are what we call strong bars, some are weak bars. I mean, that black one, look, that means that was like a test. That's a strong bar. And you accept little no demand up bars because you know that before any up move, they want to test. And that's classical. That's why I suggest you tend to specialize in various instruments, because if they did that shakeout now, they would do that in the future as well, because the people behind those trades, they tend to do the same thing over and over again. You would expect higher prices during the day.
All right, now let's have a look at the bigger picture. And let's see if we want to start looking for a long trade here, or are they going to mark this down further? We don't know. No one knows. But let's look at what happened to the Aussie dollar yesterday, shall we? Because remember, Tom identified strength in the market, but I actually shorted it. Okay, let's go and have a look. All right, so this was yesterday's price action. If we all remember, it's a 15-minute chart. Now, I was able to take a short trade down to the round number that I gave you right here. And Steve Phillips is in the room as well. Good morning, Steve. Hope you're well. Good to see you. And Steve, if you've got a microphone, let me know if you've got a mic. I'd certainly like your opinion on gold, because I think there's a setup that I'm going to take here on gold today. So, Steve, if you've got a mic, let me know, and it'd be great to have you contribute to today's session. So, what we see is that Tom felt the market was being accumulated. But when we started looking at the accumulation, it started in here, didn't it? And I traded a 5-minute chart and got a short trade from there down to about there. I took a piece of the action. Okay, just a piece of the action. Didn't take the whole piece, but actually I got out right on 1.0211, and the market went down to 1.0196. But then what happened? Through the whole of the Asian session, it's picked up. But what do we have at the right edge of the chart up here? We have weakness at resistance. Here's your resistance line. I've drawn a red line across it, look. There's where supply came in, just here. Then we follow through, we go back up, and we upthrust the supply line. So, this is a 15-minute chart, Fiona. So what are the chances now that they're going to do the same thing at that level? We will see. I think you're going to see higher prices on the Aussie. Sorry, this is UK time on this chart here. Yeah, this is from eSignal. So let me have a look. It's no, it's actually in Chicago time. My clock is set for Chicago time. So this is the live bar here at 6:14 a.m. So this is actually set for Chicago time. So the market pushes up, and then what do we have here? We do have supply coming in. There's no surprise to that there. We've got a resistance level above us. Now, if this market goes below the low of that bar and then goes back up on no demand, I'd be interested in shorting there, because we're going to have a change in behavior. We've had our first lower bar, a level bar, but not on very good volume. A lower bar, I'd expect now to probably see a no demand bar here. And we are at a resistance line. So we are seeing a change in behavior trying to appear. But my experience tells me that they will probably upthrust here. And so we will probably want to be looking to go long on any sort of test ready for a surge up. Daniel says, could I explain the high volume widespread bar around 18 o'clock? I think you mean that bar there. Is that the one, Daniel? Yeah. Well, what happens here is we get a surge in volume right at the open of the Asian session. What happens, though? The market, does it change behavior because of that? No, because they're going to mark it up to the resistance line. And what happens is they come back and test that bar during the session. And in fact, it's that bar there and that bar there. All of these bars here tell us that they're supporting the market at this price. So it's not classic absorption volume at all. But I wouldn't be short on that bar because we haven't changed trend. We haven't changed behavior. And it was the news, says TP, that changed it. By the way, TP, thanks for your email. I did get it last night, and I will respond to that. So what we see is the market retracing, finding a support line, and going up another leg. Now, weak markets don't behave that way. If that was genuine weakness there, we would have seen a change in behavior. But we never saw that change in behavior. And in fact, over here, we have a classic test. And that is a test in a rising market. The market's rallying up. And of course, what do we know behind us? What does the background tell us? We've got a resistance line to the left of us here. So do not be at all surprised here today to see some sort of upthrust of that resistance. Now, I'm here with Matt, who is a professional Forex trader and has agreed to come and talk to us today about a trade he's taken this morning here on this Euro chart. And I've got different time frames on the Euro. Now, we're looking at the moment at a, you can see a strong downtrend. Oh, it was pound. You took the pound, sorry. So let's just go to the pound chart. I think it looks pretty similar anyway. And we'll go to a 15-minute chart. And there was the retracement trade. So that was where probably Matt would have taken a short trade there. But it was on cable, not the Euro. So we'll look at the cable. Now, the cable, for those of you that don't know, is the British pound versus the US dollar. And this is the currency futures contract that I'm looking at here, but you trade the spot Forex, right? So we'll go and have a look at the spot Forex market here, and we'll put up the 15-minute chart. Now, the reason Matt's here with us is Matt actually used to do a newsletter that we're looking to relaunch that was all to do with Forex and looking at which Forex pairs move and why, because they all move, they're all correlated in some way, shape or form. Now, I talked a lot about the gold market yesterday, and when Matt's had a look at this chart for us, we're going to go and have a look at gold, and I'll bring in Steve Phillips in about 15 minutes time, because there is a setup right now on the gold chart that I want to show you. And then we're going to go and actually have a look at some principles that we've learned the last 2 days that are happening now. So there's no PowerPoint here for the first part of the presentation. We're going to go and look at real charts. And I think that's the best way to learn. Anyway, let me introduce you to Matt. As I say, Matt's a great friend of Trade Guider and is an expert in the Forex markets in his own right. As I say, wrote his own newsletters, but has been learning from Tom Williams, the master, volume spread analysis, and will be a contributor in the new year, we think, to the VSA Club. So give a warm welcome, please, to Matt.
Hi there. Thanks for the intro from Gavin. As he has rightly said, I've been working with Tom to study in greater depth, certainly volume spread analysis. And as a tool, in addition to other trading attributes, I suppose, it really secures the trade in its entirety. I tend to use, along with now VSA most certainly, I tend to use the Fibonacci charting tool. I tend to also use equities along with gold and oil, and exactly where they're going on any one particular trade in any one day. My speciality specifically would be cable, albeit I do trade also euro-dollar. Naturally, when looking at any currency pairs, you tend to look at the crosses accordingly. So the newsletter that we're then going to be putting together, or the daily snapshot that we're going to be putting together, will talk about other currency pairs also, but it will home in specifically on cable and euro-dollar for the simple reason that it's the one that I've always traded. Now, as Gav said, and I obviously gave the information to him earlier on this morning with regards to the trade that I took just at the British Open. I have to say I tend to wait until a little bit further on in the morning before entering into the trade, but it was just a great opportunity as far as I was concerned to short the market. As you can see, just after 8 o'clock actually on our time, British time, London time, we saw the market. Large volumes actually coming in and saw strength in cable. Pound then obviously moved up. Well, what I did, I then took a position waiting, using VSA specifically, along with the fact at the time we'd just come out of an Asian market where the indices right across the board, and I'm talking stocks as well as the gold and as well as oil, were all on a downtrend. I then looked and collectively pulled everything together, but utilizing VSA is the final tool to then make the decision to go short, and that's exactly what I did. I shorted.
You were counter trend trading on this. Is that where you went short? Just in here.
Yeah, because I'm looking at it on first thing this morning. So if you go back to you're on Chicago time, aren't you?
Yeah. So
yeah.
Yeah, okay, so this is a 15-minute chart. If I go, I'm sorry, I'm on the odds to the pound.
Yep.
That would help.
Bear with us.
Okay, here we go.
There we go.
This morning session, yeah.
Yeah. So you'll see that we saw a move, an up move, and the continuing volume, a further move with the clear signal above here on a shorting position or supply coming in. I then took the trade, let it fall slightly. I must have taken that trade at around about 8:30 or something like 8:15, and followed it down and took out 15 pips. I put a stop in at the earlier high in the previous session of about 160.10, but actually just then followed it down, took out the amount of pips that I needed to on that particular session.
Set target, man.
To be honest with you, I tend to look at if I go on a stop of, let's just say, between 10 and 20, but around about 15 pips, I will then look to take out between 15 and 30. So it's, yeah, reason, yeah. But it's, however, with the best one in the world, this market is all about sense and not to be too greedy. If you feel as though you've hit a target that you specifically want to take on that particular day, and you set yourself for that, then that's exactly what you'll do. You'll come out, take the money, and to be honest with you, I then don't re-enter the market. I've taken what I needed out for the day, and Tom and I were actually talking earlier on today with regards to having a fresh set of eyes coming back into the market and having a look at, reassessing or reevaluating the market at any one time. Looking at the screen all day long, I can absolutely assure you, is not the way to trade. It's, if you've taken whatever, whether you've taken a hit or whether you've taken an amount from the market, either way, you need to come away and then have a look at invariably the next session. Will give you some clear indicators. But if you're watching from a British pound perspective and you're looking at the UK market, you can, during the day, you can actually see the trends that are taking place, certainly for the American Open. So really coming back to the point with regards to where we're going and what I'm specifically looking for, as I said, the key to certainly any trading, but the thing I tend to use is, and I'll introduce a new word to you if you like, it's simplance. It's simplicity and patience, and the two together, if you make sure that you consistently go back onto that particular path, you're then in a position to become, I believe, a successful trader. You haven't got to be in the market every 5 minutes. Go in, take your position. Given the fact of the indicators that you specifically use, and during the newsletter and other occasions, I'll certainly be letting you know what I use, but I'm keeping it simple, with the undercurrent, of course, of using volume spread analysis naturally, because whichever way you slice it, that is the key indicator as to how the market will then move. But in addition to that, utilizing other key indicators, but keep it on a simplistic basis. You don't need to make it difficult. And I think as human beings, we tend to make it far more complicated than we need to. But like I said, I'll be guiding you through about what I'm going to be, how I trade, and show you the path of simplicity alongside patience. Take your time. Tom has mentioned it before on numerous occasions. Wait for your bus. There's no point going into a trade if the signals aren't quite there. So that's basically where I'm at. Like I said, the trade that came in this morning, took a short, came out. It actually fell right down to around about 159.60, I believe, but I was out at 159.76. But then just walked away, made myself a cup of tea, came back, carried on looking at the market just purely for today. But I'd taken my money first thing in the morning. So on that particular point, that's it. I won't be going back into the market for today. I'll then relook again for tomorrow. I am an intraday trader, but it's again not to be greedy. And I tell you,
little and often, Matt.
Yeah, you got it. Absolutely, I'm with you. I'm absolutely with you 100%. And that's for me how I've traded, and I'll continue to trade in exactly the same way. And I'll show you guys again. Should you be wanting to move towards forex, as Gav says, forex is my passion and I suppose skill. I will be enlightening you all on what to look for specifically in euro, dollar, and cable. I am going to follow the Aussie dollar because it seems to be something that has come to light certainly over the last couple of days.
I've made a lot of money on the Aussie dollar,
clearly. So I will be following that also, but again, homing in on the currency pairs that I feel most comfortable with because I've been following them and writing about them for many, many years. That's basically it. I will pass you back to Gav and look forward to speaking to you all again in the very, very near future. Thank you.
Now, interestingly, let's have a look at why Matt took his trade there. Okay, so let's look at 4 bars there that give us a clue as to what's going on here. So we get the open of the UK session here, and a couple of things happen. This bar here closes in the middle. Now, it's against the trend of price. We're in a bit of an uptrend here. But watch what happens to the next bar, and this bar, and this bar. Can anyone tell me what that bar is? That one right there, where I've got my cursor. Have a look at it, and look at the next bar, and tell me what's happening on that bar. It's a perfectly reasonable place to short there. Yep, Lance said it's a violent test. It's a test. There's a clue. It's a test. I definitely agree with that. Let's see if the software agrees with you, Lance. Well done. It is a test. Okay, it's a green signal. But look at the next bar, everybody. There's a big clue there as to why Matt was going to go short. And when we go down a time frame, well done, Luke. Yep, well done, Kling. It's a failed test after weakness. There's your weakness. There's a test. The next bar reacts negatively and actually falls into the body of this bar. Now, if we look at a smaller time frame and we go down to, say, let's go down a time frame to maybe a 5-minute chart. We could even go down to a 3-minute chart. You will see almost definitely examples as that market fell. So here is where we were looking at. Okay, and what we see, and again, I'll put a 3-minute chart up as well, just so you can see the principles in different time frame. Okay, this is a 3-minute chart running live at the moment. Now here, notice where Matt said he was going to go short on the 15-minute chart, we see a clear no demand bar after weakness. It's then confirmed on the 3-minute chart by more no demand. So notice as how I chump down the time frames, we get weakness on the 15-minute chart and the market begins to fall. We go to a 5-minute chart, we've got the weakness on the 5-minute chart at the same time frame. But the 3-minute chart gives you a very good entry in a downtrend. In fact, there, the market's making lower highs on the bar, and that, for me, was probably, that would have been at 8:36, Matt, and that's where you said you took your trade. So, we haven't, by the way, Matt's only just arrived, so, I didn't see this chart before, but I can see the logic there as to why he saw weakness in the background. And we also, as he said, had, if we look at yesterday's price action on the British pound, we were in an area where yesterday the market had found a support level down here, and same with the Aussie dollar. Exactly the same thing had happened. Now, question comes in, how can you get volume in Forex? It doesn't exist. Good question. We do get volume in Forex, and it's called tick volume. And in fact, my tick volume on this chart comes from eSignal. And it's actually taken from the top 200 banks around the world, and it's amalgamated as ticks. Now, remember we said in Monday's seminar that volume is activity. Remember that? We all talked about that. Volume is activity. Well, tick volume works exceptionally well, as Tom's about to explain, when we're using it in the Forex market. Now, Tom, I'm just showing a chart here of Matt's trade this morning on the pound, which, when you look at it on a small time frame, was a very good trade because there was weakness in the background. The market was changing behavior on the 3-minute chart, and there was a target to go for below. But notice, if you listen carefully to what Matt said, he said he already had in his head a target of 15 ticks. He didn't tell you how many contracts he was trading. But if you've got a 15-tick target, and just to give you an example, and let's say I'm trading the currency futures of the Australian dollar or the pound. 15 ticks, if you're trading 5 contracts, would give you about $37 per tick. Times that by 15, and that's how much money you're going to make in about an hour and a half. It's about $300-400 US dollars. Now, it's very nice for a day's trading session, you know, for if you're just trading 5 contracts. Now, the contract size on the British pound for if you're trading on the currency futures market is $6.25. Okay, so it's $6.25 for every tick of price. And I'll go through with you what the different contract sizes are later on. But Tom, we've got a chart here which has got a setup based on supply coming into the market. Your signal says there's hidden selling in the bar. Sign of weakness 90. We note the next bar closes lower. But you didn't short here, Matt. You waited for the market to come down. And it looks to me like your trade was perfect because here, if we mark the bottom of the bar on the 3-minute chart with a red line, and we watch what the market does as it penetrates, it goes through the bar and goes back up to that line on no demand. Great trade. Great trade. And actually taking a piece of that pie there, that action there and there was absolutely fine. I mean, you know, because if you look at yesterday's action, you've got support down here and they've brought it down to support and then tried to buy some more back, which is exactly what's happened. So, Tom, how is it then that tick volume works? Now, this is one of the hidden secrets of your hedge fund software that we're going to build because you're desperate to get tick volume, aren't you? How does tick volume work and why is it so important? Yes, Tom.
Well, a lot of firms claim they've got tick volume, and a lot of it seems to work quite well. But real, as far as I'm concerned, tick volume is activity volume. The amount of activity that's taken place on the bar, that can be converted into volume. I did have a piece of software here several years ago. Well, I've still got it, but we don't use it because it was a bit complicated and one thing and another. And the programmer, who was Polish, had stopped working. But nobody else in the world seems to have done what he did. And what we got him to do was that measured the amount of activity that was going on the bar. And that's, see, volume, when we, don't forget volume, is what activity is going on. And that's what's important. What sort of activity is going on? And on that activity, what did the market actually do? Now, I'm looking here at a 5-minute chart. The British pound, is it, Matt?
Yes, it is 5 minutes.
It is. Now, we just got a little up move because we had a test.
Hold on, let me just get the chart.
1, 2, 3, 3 bars earlier, look. There it is, goes down, close on the high. There was a bit of an increase in volume, but that was buying, look. And that's why it's gone up like that for a few bars. But tick volume is, if we get proper tick volume, but the volume that they come up with now, I'm not quite sure how it's done.
From the banks. It's called GTIS.
Is it?
200 banks. Yeah.
And then the what, e-signal, they collect that information, do they?
Yeah. Yeah. And it's very good. You've got a signal actually right on here.
Yeah.
That's it on your chart, which is no supply in a rising market. They're testing the top of this bar here.
But, you know, they say, you see, the reason why it's difficult to get proper volume from currencies is that, look, if I'm Barclays Bank and I'm doing a big deal, I don't want Bank of America to know what I'm doing, and they don't want me to know what they're doing. You know, it's all cutthroat stuff. There's no friends in the stock market or the markets, whatever they are, which is, you know, which is understandable. So they don't give out the volume. They don't tell you what they've traded, but they can't hide activity volume or tick volume. And that's why it works like that. Right. But the pound at the moment is just popping up on the back of that. It's really like a spring, really.
Thank you. Right, now let me show you something very interesting just to show you this again, for those of you that do trade the currencies. How many of you here do trade currencies, by the way, yes or no? How many of you trade Forex or currencies? Just want to have a... Or would like to, yeah. Some of you just would like to, but... Okay, so it's about half and half. About 50% said yes, 50% said no. Okay. Now, let's look at this chart to the left. On the left, you have the currency futures chart here. And at 5 a.m. this morning, we have a nice reversal. And the volume on this chart here is coming from the exchange, the Chicago Mercantile Exchange Group, CME Group. And we notice the volume at 5 a.m. is very high. You can all see that? Now look at exactly the same time in the spot Forex market. And what do you get? Almost the same thing happening. Look at the volume on these two bars here and these two bars here. Now this is what's called arbitrage trading. There are traders who are trading the spot Forex market and the futures market, and they actually trade both together. And you can see at the moment, these markets are almost in exact alignment. But the volume here is tick or activity volume, which is not coming from any exchange. It's just coming from the bank feeds. But the volume here is coming from an exchange. It's coming from the Chicago Mercantile Exchange. And when you get high activity in the spot market, it also follows in the future, which is a very interesting concept because it proves that volume does work without shadow of a doubt in the Forex markets. It absolutely definitely works. Volume, when you can read it, is very powerful. Now, let me just see if Steve Phillips is here. Steve, are you with us? You just put your mic on if you're in the room. And so, you know, Steve is actually the trader who runs our live trading room that we run. Very good trader. Steve, when you're back, let me know. Just type in, because I can't hear you. So when you're back, just let me know, because I want to go and have a look at the gold market. Oh, Steve, I can't. Have you got a microphone, Steve? Because we can't hear you. Yeah, I can't hear you, Mike. I don't know if you, if I need to unmute you or make you a presenter. No, your mic's open, Steve, but we just can't hear you. So I don't know. You may have to check your microphone settings. Okay, log in as a presenter. All right, mate. Yeah, you probably need to do that. Okay, so let's go and have a look at what I want Steve to look at, which is the gold chart. Okay, now, can anybody remember where I said I thought gold would get to? Anybody remember the target I gave? Yeah, well done. Some of you are paying attention. That's good. Okay, now, this is very interesting. Yesterday, we went down to 1705. We didn't quite get there, but we're getting a lot of support down here at this 17 area. Now, I still think we're going to go down to 1700 probably today. If it breaks 1700, then the next level is going to be the 1600 level. It's going to keep going down to that level. Now, we've actually seen a setup that happened here this morning. Right here. Now, I'm going to say which signal that is. Can anyone tell me the name of that signal for the prize of the morning? Can anyone tell me what that is called, that bar there? See, they're all typing this in, you see. They're all learning. Yeah, very good. Let's see if you're all right. Well done. It is indeed a hidden upthrust on high volume. And there's a few things that makes that upthrust and the one behind it very key to this setup. And this is what I wanted to show you. So let's have a look at the trend of price. So I've been very confident that the gold was going to fall because of a signal that came in on the daily charts. And that signal is Tom's favorite signal up here and here, the end of a rising market. Okay, so we have our favorite signal, but it's number of things makes this particular indicator powerful. Firstly, it's at a resistance line. So we know there was a big fall. So what I'm going to do is measure off where this market went from this resistance down to here. and how many days it took. Now please listen carefully to this because I've never discussed this before. So I look at the low of the market, which was achieved in May of 2012, and we can see the low in gold was 1526. All right, and there's the gotcha bar, and then the market fell. So I know that between February and May, which is about 4 months, gold had a significant downward move because of the weakness on these bars and the gotcha bar. So I know that that's a resistance line. Here, I've got a definite trap by the smart money to lock traders who think the market's going to break out here. And as it tries to break out, look what happens. No demand at market top, which is what we saw. And when I did the YouTube video a few weeks ago, forecasting the 1700 gold price, it's because the market will not go up through those levels. Steve, I think I hear you. Are you there, Steve?
Good morning. How are you?
Hey,
doing?
Steve, how are you today, mate? Nice to see you. I've got Tom Williams here and Matt with me, who's a Forex trader. So it's great that you can come in and contribute. Steve, I'd love you to have a look at gold, in your opinion, where you think this is going. That would be absolutely great because it's I think we're going to go to 1700. We can see on the daily chart, Steve, that we've got no demand at market top. We've got a negative reaction here, as you can see. And then we have lower highs on the bar each day. We go up on no demand a few days ago. We come down, we take out the price support on this bar. The next day we close higher. And then as we look from yesterday's bar, we're starting to fall. And as I look at the smaller time frame, the 15-minute chart and the 5-minute charts, we've got a bit of support coming in now. Literally just came in a few minutes ago. But overall, we're making lower highs on the chart. So, Steve, I'll give you the screen. Welcome to the mentorship course. And take a look at gold for us and maybe the S&P and let me know what you see. Give Steve Phillips a warm welcome. Over to you, Steve.
Thanks for that, Gavin. Good morning, Tom. Hope all's well. Good morning, Lance and James.
Welcome to GoToWebinar, Web Events Made Easy.
I'm going to mute myself. Good morning, Jitendra. Good morning, Sen. You should be able to see the daily chart of gold now. Good morning, Joyce. Good morning, Len. Nice to see everybody here. Good. Gavin was talking about that bar falling through support here. There's a nice pivot low at 1738.3. And it fell through, and you have a little more supply coming in here. So really watching these lower levels. You can see a shelf back in here. I look at efforts to rise, and then I look in the background of where it was rising above. And you see this pivot here. So I look at that as support. And really look at that top at 1681 level. That would be the next area you would expect to slow down and try to accumulate. And if you look at over at the dollar, this is the UUP. There's a double bottom. And it's sitting at the creek right now. So we have a double bottom sitting at the creek. So if the dollar pushes above here, you're going to, they do correlate together, but use your chart reading skills, of course. We're going to most likely see lower prices down here. We do have FOMC coming out today, which will create a gyration in the market. It'll give them a reason to manipulate it. Things to look for wide spreads today as well. But if you see a push down and any pushes or any retracements back up here, the 1728 level, you would expect to have it roll right back over. That's the bigger picture. Support, possible support down here. Any signs of weakness, you get it short all the way up to 1737 and expect it to roll right back down to 1680. And then see what happens at those levels. But yeah, it's definitely rolling over. We have a rounded top here and a slice move through to the downside past this pivot low. So with all that said, I got gold on the Infinity Dome with volume and price spread here. Look at the intraday stuff. Here's the 240-minute chart. As you see, it's over here on the left side. It's been trending down. Gavin did point out that there was a bit of some stopping volume, but overall we're on a downtrend. If you're looking at the bigger picture. But you see there's a nice widespread down bar here on the 240. Massive volume closed in the middle. Next bar is a test. Went up, created some weakness. Came down. Now we have a possible double bottom and a test right here. You would expect an effort to rise, but any weakness that shows up around 1715 in the bottom of this volume spike down here, which happens to be 1716 level, you'd expect it to roll right back over and go to 1704, considering there's so much weakness on the bigger time frames. Here's the, on the right side I have an hourly chart. A little double bottom. They tried to accumulate, tried to stop it. This is a trap move in the background, by the way, right here, because there's a resistance here. That's what the chart's telling us. So we've got a widespread down bar, and because it didn't break through that level, you can consider that a trap move. They tried to stop it here and jumped above it, and it just failed. Now they're accumulating right underneath it again, trying to stop it. But because it's fallen, all this right here now, I'm looking at this pivot low, widespread down bar, go back. That'll be an area of contention to get through at 1722. So any weakness that shows up at those levels, it should roll right back over intraday-wise. That really correlates with the top of the creek here. And ultimately, up in here at 1732, you'd expect weakness. So if you see any upthrusting or no demands, you expect it to roll right back over. Effort to rise above 1715 in a test. Watch it try to at least get a catalyst to that level where it'll roll over. So let's take a look at some smaller time frames now. Take a look at the S&P real quick too. It's right down to 15. Massive volume here. Here's that small accumulation that failed, and that's sitting right underneath it. So you've got to pay attention to all this volume over here in the background. And that's, again, 1717. So there's a confluence of things going on the charts, on all the time frames, telling us the same story. It's having problems getting above 1717, and there's a trap move in the background. Look for it to bump its head up there all the way up to that 32 level, 1732 level. I see widespread bar here, a lot of volume, then it came back down and tested it. They tried to push it back up, but ran into problems right up here. And now it's a rock and a hard place. So if it breaks up here, intraday-wise, expect to test, and there is a little catalyst to these levels up there. But if it breaks down, look out below. It's going to hit some lower levels. Now look at the big time frame to see where it's going to go down. You got 1681 underneath you there. And 1691. Some support, possible intraday support on the way down. 1681 to 1691. But definitely looks weak and rolling over. So what I just did is I looked at key levels of support and resistance. And to become a successful trader, you have to understand how to read the imbalance of supply and demand with the price and spread and volume. What I did is I just found my support and resistance levels, and then I analyzed what part of the phase we're in from top to bottom, and then I did an anticipation ahead of time. If this happens, I could do this. If that happens, I could do this. So if I get a test or a shakeout in certain areas, I can go long. If I see upthrusting, no demands, any type of signs of weakness, I can go short. So I'm pre-planning before it happens, so I'm not reacting to the market, because these types of bars are designed to create emotion and get you all excited to the long side, and then they turn you around.
Steve, we got a question actually.
That's
Steve?
exactly what I did.
Yeah, Steve, we've got a question
Okay.
actually. Yeah, so I'm going to open the mic. It's actually one of our customers called Lance, who's based out here in the United Kingdom. So, hi Lance, I've just opened your mic. Say hello to Steve Phillips.
Hi, Steve.
Hey,
Hi,
Lance, how
Tom.
you doing?
Matt, James. Hi, very well, thanks. Steve, you was looking at support resistance levels, and you mentioned pivot levels. I just want to focus on these pivot levels you mentioned, because I'm always sort of looking out for high volume, ultra high volume, whereas you're looking at pivot. Not necessarily are these on any high or ultra high volume bars. So are they still? Well, obviously they're strong support and resistance levels. These pivot. Why is that? Why are they strong when it could be just one bar? What just sticks down a little bit on lower volume, then maybe 5 or 6 bars back. What has ultra high volume?
Excellent question. What I'm doing is I'm identifying the high volume areas. Let me draw it out on paint. You're familiar with the expression ice in Crete?
No. I've heard
Yeah.
you mention it, but I don't know what it means.
Okay. Well, are you familiar with the W's, double bottoms,
I am with your double bottom, kind of.
accumulation phase,
Okay.
and distribution, double tops? That's typically what a distribution phase looks like. So the prelude to that is usually widespread up bars and volume spikes. And then you'll see upthrust, no demands, things of that nature. And what will happen is it'll create a pivot low after that phenomenon. And when it slices through it, that becomes resistance. And that's what causes a trend to start.
But couldn't there be maybe, I don't know, 5 or 6 days in the background, a cluster of bars what are acting as a resistance below that pivot? Which is what I'm trying to say is what's more solid, a cluster of bars acting as resistance or a pivot level? Do you know what I mean?
Well, you've got a wide spread up bar here, which this volume is actually here. They're tricky that way on this one. It's not end of day data here.
Okay, so
Now,
right there. So hang on. Right, that pivot bar there. Yeah.
I consider that to be ice, and the ice is a possible bottom from a double top. We have a wide spread up bar, massive volume. That's radar's up.
Right.
Now we
You know
have
the closing price of that wide spread up bar.
Now we have an up thrust. This is real important here. We got 1, 2,
It's only
3,
important to
4,
buy
5, 6 right here. Wide spread up bar, followed by an up thrust. Came down, shook it out at the level. They had an effort to rise. Now we've got 1, 2 higher lows. So now that we have 2 higher lows, you establish that line as a possible, as support for 1, because of the background, the effort to rise. And now we can call that the ice. So any move that trades below 38.3, you would consider that a change of behavior to the downside because of this bar in the background. So we have a wide spread up bar.
Now you know that closing wide spread up bar, the closing price on it.
Mm-hmm.
Now, in the future, if we was to say let's go in the future, if the price came back up to that closing price on low volume,
Good
or
stuff.
up
Perfect.
it would fall. However, this is my thing. Now we've got a pivot. So am I going to wait for? Am I going to be looking for a low volume bar back up to the pivot level, or to this widespread up bar? You bars back.
To that zone.
Zone.
It's an art of the science. It's not exact science, but so there's a zone there. And you know, if you got, let's say you had a short signal prior, just a little early, and you got an upthrust right in here, and it got you short down here, well, you know you'd put your stop right above this major area of resistance, because if it goes above that level, well, the behaviors change.
Okay. So, in the future, Steve, would you consider that pivot bar serious resistance, or would you consider the high volume, widespread up bar more severe resistance or support?
I would
if it was to go into the future, which would act the strongest?
I would put weight in any weakness between 1720 all the way up to 1775.
Right.
And that's
yeah.
based on this widespread bar here with the pivot right in the middle. So
Got there in the end. Yeah. Cool.
yeah, 1738.
Yeah, good question, Dance. Good question. Let me just close your mic. Yeah, Steve, there's a couple of questions that I just want to, I don't know if you can, the two questions that have come in is, can you explain what an ice and a creek is? Well, let me just tell you what Steve's explaining there. Back in the days of Wyckoff, Richard Wyckoff, and in fact I think it was Bob Evans coined the term breaking through ice and jumping a creek. Now what he used as an analogy was a Boy Scout. And he said, well look, if you're jumping a creek, that means the price is going to go up through resistance. You need some energy to jump across the creek. So let's imagine you're a Boy Scout or a Girl Scout, and you're there in front of a 6-foot creek or river, and you've got to get across. Now, if you stand right up to the edge and take a big leap, the chances are you're going to land in the creek because you've got no energy behind the move. But if you go and take 15, 20 steps back and then take a massive run at the creek and then jump just like a long jumper would, the chances are you're going to jump the 6-foot creek. So Wyckoff said that the volume is the energy that's built up in the market to push through a resistance level. Okay, and that's what we call jumping the creek. It's pushing through the resistance. Steve's drawing it on the chart there. And once you've pushed through that resistance, you look for a pullback on very light volume, and that resistance to price now uncannily becomes support very often, and is a great place to go long. Now, jumping the creek is also known as absorption volume, because what they're doing is bullish. It's a bullish move. They're pushing the market and price through a resistance level. Now, on the opposite side, Wyckoff also told the story, as did Bob Evans, of the Boy Scout that was walking along some ice. And for much of the walk, the ice is thick, which is wonderful. And so he stays above the ice. But all of a sudden, he comes across a patch of very thin ice, and he falls straight through it and sinks and drowns. Very sad story. That is the gotcha bar. The ice is representative of price action, and if there's no support, the Boy Scout falls through the ice rapidly, and because of the weight of the water in his body, he sinks to the bottom, and that's what we call falling through the ice. So that, I think, will cover those 2 points. Great. Okay, Steve, please finish your point as well, because I know that you were making a point there before the question, but hopefully that answers the question for everybody. Does everybody understand now falling through ice and jumping the creek? Does that explanation help? It's just...
Good stuff.
Okay. Good. All right, Steve, back over to you, mate. We're enjoying your analysis, so please carry on.
Yeah, thanks for the question too, Lance. It really opened up some doors there, and just had a nice little 10-minute discussion on ice and creek. Pretty important stuff. The prelude to that was wide spread up bar. You get an up thrust later. Where's that pivot low going to form? And then once you get 1, 2 up bars lower, higher lows, you can use that as your support level. And once you see a slice through that, you know they've fallen through the ice. And any up move to those levels, you're going to expect it to come down to the support in the background. So what I was doing is I was finding major areas of support and resistance, finding the phases, and then breaking it down into smaller time frames to look for specific things to happen in certain areas. And let's take Sam wants to ask a question on the mic as well.
Okay, yeah, let me open the mics. Just bear with me. So who have I got? I've got YF wants to open a mic. So bear with me, YF. I'm going to open your mic up right now, and you can ask Steve a question. Okay, YF, you're on air, and say hello to Steve. Hi. Say hello to Steve. Hi.
Hello. Hello.
Hi.
Hello, everyone.
Hey there, YF. How are you? You've got a question for Steve, I think.
Yeah, I have a question. Can we show back the chart where Steve is explaining about the ice? Yeah. How do we know if this ice is forming and it's not an absorption volume? How do we differentiate? Because normally after a wide spread up bar, the market tends to go sideways. Right? It can either go up or become a breakout, or it can come down, which is the falling through the ice. But how do we recognize them when during this phase of a sideways market?
Good question.
Excellent.
Over to you, Steve.
Yeah, Sam, could you mute your mic while I answer the question, and then I'll unmute you again because we're getting.
I've done that. Yeah, I've done that, Steve. I've unmuted it because there's an echo. Yeah.
So the question was, how do you anticipate the ice before it's happening? And it could possibly be ice, or it could possibly be an effort to rise. So what I do is I look for widespread up bars, and then it did one of these, and then it up thrusted. Radar's up.
So next week,
Something's going to happen here, and then it starts to push down, and then
yeah, and then we could do some trading, half a day or something.
you see that. You say, okay, it's trying to absorb, right? It's possible testing, trying to absorb. You know that there's some support in the background. It's absorbing. You know, right there, we had 2 up bars, and that's exactly what happened on the chart, right? 2 up lower highs. So I'm going to mark that as a possible support for sure. So if it comes back there and tests, I'll look along with an expectation for it to rise up above these levels. Now, that's what I'm thinking at this moment. But if I get another upthrust at this top here, my thought is I'll get short and see if it'll come down, slamming down to this support. So then it does this, one of these. And if we see that, another upthrust or no demands, 2-bar reversals back into that area, the expectation is it's going to come down here and do some testing, or you could do one of 2 things. You could do test, and then you could take advantage of that and see if it'll rise up again, or it's going to slam through. And if you see that, that's your confirmation that that's the ice. So as soon as you see it slam through, it's confirmed it's the ice. So it comes back down, starts going down on a low volume. It's going to go up, push back up. It comes down and then slices through. You're going to expect any signs of weakness, and it's going to start pushing down again. So the thing is you don't know until it starts to show you what's happening on the chart when it gets to those areas. Now, one thing that does help is if it's on an uptrend and there's absolutely nothing to the left, and it just spikes up. Question was, if you're long, where do you exit related to the ice level? You'd find your area of support and usually put a stop right under where you wouldn't expect to be long anymore, and start looking for short and change your opinion. So I always put my hard stops under the main areas of support and resistance. Hope that helps, then. Yeah, that's why it's always good to wait for it to close lower than the low of the pivot.
Okay, is there any questions for Steve before we go back to Tom here? Tom's going to look at the S&P for us, the daily chart of the S&P. But thank you, Steve. That was absolutely brilliant. Brilliant. And just off the... yeah, nice to have you now. I'll give you a call later as well, Steve, when I finish the seminar. I'll be finished about 4 o'clock. So I'll give you a quick call.
Sounds good.
And we'll catch up. Yeah, okay, thanks, Steve. Thanks, everyone. And let's just take the chart back here. And Steve, if you could mute your mic, that'd be great, because there's a bit of background noise as well. Thanks, buddy.
Thanks for all the questions. Have a
Take
good
care.
afternoon.
Yeah, great stuff. Really, really good. Yeah, Tom and I were listening in, and Matt's listening in here. Let's good. All right, let's just do a quick sound check here. Can everyone hear me okay? Lance, yes, slicing through the ice is in fact a gotcha bar. Bill said Steve is very good. Yeah, or was very good. Steve is a very good teacher. He runs our live trading room, which is going from strength to strength, and he does very well. So, Tom, E-mini S&P futures. Now, we've got a couple of... Yeah, got a lot of people asking, is this market now weak because it's fallen? Do you see weakness? So let's put up the daily chart, and then we'll take a break in about 15 minutes' time. Someone says, are we going to break? Yeah, we'll break in 15 minutes' time. But we've got a really good chart here. Okay. Now, yes, the question was about this bar at the right edge of the chart, this one here, where it's a wide spread down through this price support line. Does this now show that this market is a very weak market? Yes, we will go back and look at the currencies afterwards, TP, because I'm actually looking to trade the pound today if we see a setup. But let's focus on this because the question came in. This bar here looks like a weak bar, okay, and because it's a wide spread down, the volume was quite high on it, but it took out the support level. And so John particularly picked this up and wants to know what's Tom's opinion on the S&P on the daily chart and also the weekly chart. So, do you want to start with the daily, Tom? That's an hourly chart you're on there. Yes. Well, he's seen something on the hourly, so let's start with that then. Oh, I see what you see. All right, here's Tom.
Well, when you look at the daily chart, you can see that we're oversold, right? That means we're well below the trend line. And don't forget, that trend line that you can see there is only a 50% retracement, I believe. So there's a major trend line below. But it pays to check the, I always look at the hour as well. And I'm looking at the hour chart here. And there's a huge shakeout. Can only be one thing, a shakeout, a few hours back. That means that they want to try to mark it up. Although you've got some weakness immediately overhead there. So they'd have to push up through that if they're going to be bullish. But because you are oversold, right, and but you've got lots of weakness in the background. Those wide spreads down you see, closing near the low on increase in volume, they're built in signs of weakness, really. And the market, that will affect the market. However, look at this hour chart. Can they see the hour?
Yeah, it's going up now from your last signal, yeah.
Right, okay, so there's a hell of a shakeout going on down there. Well, how many hours ago, Gav?
That would be about, well, it was actually yesterday morning, it's when they shook it out, so it would have been about 20 hours ago.
Oh, that's far back.
Yeah.
But that's the reason why it's going up right at the moment on the hour chart. So I'd be very careful about saying that daily chart's weak. It is weak, but right now it wants to go up because of that huge shakeout in the background. You've got resistance top immediately to your left. They'll have a job to push up through that. That's almost like breaking the ice in the opposite direction. They're going to have to gap up through that if they're bullish. So I'd be very cautious about this market.
What's your view of the weekly chart, someone said?
Right, let's have a look at it. Is that the weekly there? Yes. Yeah. Okay, I've got a weekly chart now. Wow, that looks weak, doesn't it? You've obviously got some no demand up here, look, Gav.
Yeah.
Little no demand, it tries to go up.
There's a failed test right next to it.
Yeah, and then you've got this black bar, which looks almost like a hidden up thrust, look. So the weekly chart does not look all that strong. But remember, you will get another wave up. And so they could easily be marked up a bit, this chart. So you've got to be there's nothing all that obvious at the moment. So I could say category, right, that's going to fall, that's going to go up. And it pays when you're trading these markets to make sure you see a clear principle, or or should make you money. And if I were you, I would specialize and look at these different time frames.
Yeah, thanks, Tom. Yeah, just looking at this, if we go and look at this chart from the bigger picture, from a VSA perspective, we've got to keep an eye on the background of the chart. Now, there's the giant shakeout back in August, okay, where they actually marked the market down. But we don't have any opposing volume on the right edge of the chart. So that is in control of this chart at the moment. Now, if you listen to my seminar a few weeks ago in the VSA Club, I said I expected the market to come down to 1400 to retest that level. It's a very big round number, and we're very close to it. Now, of course, we've got the elections coming up in a couple of weeks. That is definitely going to move the markets, whatever happens. So I expect this is going to get marked up again. So am I bearish on the market? Not particularly. But does it look weak at the moment? Yes, there is weakness built into the daily chart, and let me show you what I mean. If we look at the theory of breaking through ice, you can see that there's a pretty clear level of ice that was formed on this line here. Okay, so we found support once, twice, 3 times, and the 4th time I thought we'd found support, and then it's come back down to this 1400 level. Now that 1400 level is quite significant because we had a nice breakout of that over here. That was pushing through, that was absorption, but it did it on very low volume. And what interested me about that bar was actually, because it was pushed up on low volume, it told me that, you know something, if I saw ultra high volume through here or very high volume there with a test, I'd have been extremely bullish. But actually the market begins to run out of energy, doesn't it? There is an upthrust, okay, right at this level. So they got up here, the bulls tried to push the market up, the bears stepped in and said, thanks very much, you're not getting the market any higher there. But it didn't react totally negatively because a few weeks later, we're back up again, aren't we? A few days later. There's another upthrust, look, at a previous resistance level. So you've got upthrust followed by upthrust, a double upthrust at a market top. So that means there's no surprise that the price has come down. But what do we have here on the daily chart? We've got very high volume on this bar, and there must have been sellers in that bar for the next bar to close lower. Now, if we go up here on no demand to 1420, and we get very low volume as the market rises, then we are going to see lower prices, not higher prices. Okay, a few questions came in. Okay, TP, I just saw your comment there, and the narrow bar following is a good clue. Well, it's not closed yet, Lance. We can't analyse this bar until it actually closes. But what I do see is what Tom sees on the hourly chart here. All right, so what have we got here? We've got a clear support line. We've got climactic action. This is called a selling climax. This could be potentially quite bullish. Now, it's 2 things if you're trading the S&P today. 2 things you've got to keep in mind, and we're going to be looking at this at the open. We have got clear support down here, and we've also got that low volume test of this selling climax. So you see the market's come back down to the closing price of that bar and has reacted positively. So they certainly don't seem to want to have lower prices at the moment. As we've tried to push up, though, on the last 3 hours, these 2 bars are quite negative. They're not strong bars. I would expect more of a cause to move up. And at this level here, we've got clear resistance. So I can define my trading range quite clearly for me to look for trades. There's my resistance line right there. So we're coming up to that now, and we'll probably get there. Here is my support line. So the S&P at the moment is defining a trading range, and we've had the London session, which is usually the busiest, where you're going to see some sort of movement. Here's the London session, and it's a low volume test of the shakeout in the background. So this 1400 level is obviously a key level down here, but at the moment they're holding this price and supporting it. So when we're looking at the S&P, and the NASDAQ looks very similar, the Dow looks similar, we've got a clear area here that we can trade in a trading range. Okay, some questions are coming in. Morris says, could Tom comment on Google? Is yesterday a true no demand bar, or do you see strength on the prior 2 days and therefore you can't call it no demand? Okay, we'll have a look at that. Is Tom saying, Brian says, is Tom saying specialise? Because although the principles run across all markets, each market has its own characteristics, which make it easier to read once one is familiar or has noticed them. That's a great question. Hold on. Yeah, everyone's nodding here. Here's Tom, and then Matt, who's just about to leave, can have a few words as well. That's a good question, though, Brian, a very good question. So why specialise, Tom? What's the reason?
Well, practically all the professionals I've ever known, they specialise. Like a guy who specialises in trading wheat wouldn't dream of trading sheep's pig's bellies or whatever they want, other things. They don't do that because they get familiar with how the chart or the stock or the instrument they're following behaves. And the reason is it's the same traders trading these things day after day in the background. And leopards don't change their spots, and they tend to, example, we showed you that euro. If they had a spring or a test or a shakeout just before an attempted up move, they'll do that again. Because the people in the background, that's what they do. But some of them don't. And that's why it's a good idea to specialize. If you go dancing around looking for points to trade, you'll probably miss the good ones. And once you're in a trade, you really got to know what you're doing. It's pretty obvious that they can fool you, misguide you, all sorts of things, because that's what the markets are all about. But specialize is definitely a good idea.
I'll bring you in on this before you go.
Now, it's interesting. When the question came in, Matt, who's with me, specialises in 2 instruments. Okay. Yeah, James, I'll come back to gold in a second because we're going to look at it in part 2. So I will go back and have a look at gold. But Matt, you're interesting. There's all these different markets out there to trade. There's stocks, there's futures, there's forex, there's commodities. Now, I specialise in about 12 stocks. And in part 2, we're going to go through my trading plan and show what those stocks are and why. And you'll see a setup in 2 of them happening right now. So we're going to go through the trading plan. But Matt, just before we take a break, and Lance, I'll bring you in for a question just before we break as well. Why specialise? Why not just trade everything that moves?
As Tom says, you need to know the market. It's no different than perhaps living in a specific area. You get to know that area, and you then want to purchase a house in that particular area. You know the form. You know the prices. You know what it's likely to go to. You know from, albeit past doesn't sort of most certainly dictate future. We've covered that before. You know how that particular currency pair or that particular market works. I trade euro-dollar and cable. I've always traded euro-dollar and cable. I naturally have to look at the crosses just because that's a sort of another part of making decisions as when you want to then trade. But specifically, that's what I watch. I've watched it for 5 years, 10 years, 15 years. I've watched it and seen all the trends accordingly, and I'm comfortable with it, I suppose. And that's what Tom is saying. You can't be a master of all. You have to be a master of just a small select group. It makes you a far more competent trader because you almost know, dare I say it, what's likely to happen next given the signals you've been given. And that's basically the long and short of it. So absolutely, 100%. Specialise in your specific field, whatever it happens to be. But there we go.
Yeah, absolutely spot on. Now, the question came in from Sean. Why did I mark the closing price on this bar and not the bottom of the bar? And the reason is the closing price is the result of the effort. That's the result at the end of the day. And yes, if the price action was down here, then maybe I'd look at it. But look what happened. We came here and we tested that low. We bounced off it. And then only a few hours ago, we came back just a few ticks below the close and responded positively. That's why this market's trying to go up. I would not be surprised if at the US Open, we'll try to push through this level of resistance. Wouldn't surprise me at all. Okay, Lance, you had a question, and then we're going to go and look at Google for Morris. So let me just unmute you. Just bear with me, and then we'll take a break. Yeah, Lance, what was your question?
Yeah. You was looking at a chart 5 minutes ago, and I think we've got our wires crossed. It was I think it was the ES. It may have been the daily.
Okay.
And the bar, what got your attention because it went upon low volume. And
that one there. It's that bar right there.
Right. The following bar, the next bar, which I think is quite interesting, is that I look at it as a narrow spread on high volume. So does that mean like they're trying to cap it, and which also gives it that rollover mushroom effect as well?
Yeah, you're right. That's definitely well observed. That's the first point of supply on this chart, and it's why it's mushroomed over. You're absolutely right. Yeah, that's exactly what's happened. We're on this side of the mushroom at the moment, definitely, because there's your first point of supply, and this is really tried to go up on no demand. So what's happening up here is the sellers have blocked any further price movement, and the reason is they probably want to buy at lower prices. Nothing wrong with that. If this is genuinely weak, though, I would expect it to see, right, if this was the end of this market going up, I would have expected to see volume like that. And then a narrow spread into fresh high ground, the end of a rising market. We don't really see it. All we see is the market being sold off, in my opinion. For what we've got to look for now is the election to come in and a shakeout. That would be perfect. A wide spread down, big volume coming in. The news is bad. I don't know whether it's going to be, if Obama gets in, it's going to be seen as negative, or if Romney gets in, it's going to be negative for the market. I don't know what the market's going to do on that. But what your observation here, Lance, is yes, that is correct. That is the first point of supply on the chart. Absolutely. Well done. Well done. Okay, and Morris said, could we have a look at, hold on a second, Google. Yeah, okay, just bear with me. I just want to mute Lance. Just bear with me. Okay. All right. The question comes in. Okay. Now, Google. Okay. Have you got your end of day software open?
Yeah.
Hold on. You need end of day. All right. So the question on Google.
Just takes a few seconds to download.
Yeah. And what we've seen is, and the question I think Morris is asking, is that a no demand bar yesterday on the Google chart? And actually, you've got behind you here a test that held. It's a difficult one to read, this, Morris. It's a difficult one to read because this was a news-driven event. Now, does anyone remember what happened to Google on that day? Do you all hear the story? Do you remember what happened to Google? Apparently their printing firm accidentally released their earnings 3 hours before the market closed, right? And they weren't particularly, now, you know, I tell you, it makes me laugh. But what it did do is it created a gotcha bar. Now, that is a gotcha bar, okay? There's no doubt about it. That is not a strong bar by any means. But there is a very nice trend behind us, which is an uptrend. Now, if we put on a Fibonacci on this, we'd be down 650 here. I don't even have to put it on, I can tell you. 650 is a 50% retracement. And I would not be at all surprised, actually, to see this market reaccumulated down here, because Google's a pretty strong stock. And it's actually one that I specialize in. Now, let's go and show Tom. Have you downloaded your data for this recently, by the way, before
I think it's up to date, is it?
I think so, yeah. Yeah, it is. Yeah, yeah, yeah. Now, Tom, this is the Google chart, okay? Now, if we look at this chart, you had a clue in the background that they weren't interested in higher prices because we had, over here, an upthrust. And then we had a secondary upthrust just before this big down move. So we actually had a bit of a clue here and here that something wasn't right with this chart as it was trying to go up. But we, of course, had no idea they were going to release their earnings. Okay, so, Tom, what do you see in this chart, and what do you think is going on?
Well, first of all, look at it immediately, and there's obvious distribution at the top. Have you got the same chart up, Gav?
Mm-hmm. Yeah.
I mean, there's the start of it right there, look. got a signal on it. The market drifts slightly up, but sideways, and you've got an upthrust right there. That is definitely a distribution area there. If you were lucky enough to have a pointing figure, you take the count from there to there. If it then drops below that target, you can move the count down to a lower level, okay, when the chart tells you to. But we can't do that. But as soon as I see these huge wide spreads down like this, strong stocks don't do that. There's something wrong in Google there. Definitely, there's something wrong there. That wide spread down as it rushes down towards the previous area of support, which is here, look, is usually bearish. And they may have distributed a lot up the top, and what they want now is to take it so low that the public or the people who are in there, right, get shaken out. And you will get what we call the selling climax, which we talked about yesterday. All those people that are locked in at those top prices there, we call weak holders. And bye, Matt.
No, I'm not going yet. I'm waiting to one break. He's just looking at the two upthrusts on Google and saying, well, they must have probably known in advance of that news. What do you think?
Well, I don't know what was the news.
They came out during the market opening hours and released earnings reports.
Well,
they're never supposed to do that until after the market closed.
Yeah, they've done that deliberately, of course.
Of course they have.
Yeah, but normally, Gav, these wide spreads down like this, with an increase in volume, as it rushes towards former area of support, is not bullish, it's bearish.
Yeah.
And you've definitely got a distribution cap right above you. And you're probably from there, if the truth is known, from there right over to here. Quite a big distribution.
And Sam, say hello to Sam in Singapore.
Hello, Sam in Singapore.
Yeah, and he said you've got quite a few signs of weakness before this big down move.
Oh, you have? That's what we're pointing out.
And you're saying you're pretty sure they were distributing this.
Oh, it was,
before the
definitely.
news.
Yeah, definite distribution cap up there.
Market manipulation 101. Brilliant. Okay, everyone, let's have a break. The time now is 7:35 a.m. in Chicago. So where does time go to? Let's come back at 5 to 8, okay, and then we're going to be going through the trading plan, which is Tom and my trading plan in part 2. So it's at 5 to 8 Chicago time. Hope you're all enjoying this. That's the best way to learn, is to go and look at actual charts with principles. So I hope you enjoyed part 1, and we'll be back with you with part 2 in about 20 minutes time there at 5 to 8 Chicago time. Great stuff, everyone. See you again in 20 minutes. Okay, welcome back, everybody, to Wednesday, the third day of the Tom Williams mentorship course here. We've been looking at a lot of charts the last few days. This morning, we've actually been and looked at some live charts, and we've been looking for some principles. We've been focusing on the E-mini S&P and also the Aussie dollar. We've heard from Steve Phillips. We heard from Matt James, who's a professional Forex trader. And obviously, we've heard from Tom. But what I want to talk about in this second part of today's seminar is the trading plan. Now, most traders that I meet do not have a trading plan at all. Fail to plan, plan to fail is what I believe happens. If you don't have a plan for your trading, you're probably going to be going at it blind. Now, I originally didn't see the need for a trading plan when I started, because I thought, well, you know something? If I know the principles of VSA, I don't need to have a plan. I'll just trade what I see. But I began to realize as I started to trade that I wasn't very structured. I'm the type of human being that's, a bit shoot from the hip, if you like. So I wasn't very disciplined. And therefore, there were times when, as Tom often calls it, I would jump on the wrong bus and it would cost me money. And so I decided that one of the things I needed to do was to define why I was trading, what was the best markets to trade for me, and what personality type was I to be able to look at what best suited me. So every one of you is different. That's the wonderful thing about being a human being. We're all different. And we all have different ways of looking at the market. And this is the wonderful thing about trading. There's no right or wrong way, because, it's all about adapting what you're learning in this session and these sessions to your personality type and your style of trading. Now, in the events that I did in Australia, in Singapore, and in Malaysia, I shared my trading plan with the group and have had some wonderful feedback from several of the customers that actually decided to copy the plan pretty much verbatim, obviously adapted it to their own situations, but they took the same time frames that I use and they took the same markets that I trade and tried to adapt it to their personality style with great success. So I'm showing you my plan, which is obviously very personal to me, but it's a plan that I've adapted over a period of time, and it does change occasionally. There are times when I change things, and you'll all get a copy of a written copy of the trading plan. So let's start with, as I say, I'm sharing this with you because I believe it will help you. And even though there's some personal stuff in here that's personal to me, I think it's important to understand. One of the things I realize about trading, in fact, anything we do in life, anything, doesn't matter whether it's trading, playing a sport, doing a job, becoming a professional at something, writing a book, anything, we have to define what our purpose is. What are we trying to achieve? Just bear with me. I'll just get Tom to answer that. So we've got to define a purpose. And when I started trading, I really didn't understand what I was trying to achieve from my trading. So I didn't know what I was trying to achieve. So I then had to sit back and think about my purpose, really. What do I want to do with my life? That includes trading, but also I'm running several other businesses, and I had to think very carefully about what I wanted to achieve from all the information that Tom Williams had taught me. I could not share it with anyone and go off and run the hedge fund and keep it all to myself. But you know something? Tom and I had a deal when I first met him, and that deal was that I would continue to share his knowledge in the future, just like Wyckoff taught people, over 100 years ago. He traded his own account just as I do, but he also shared his knowledge. And of course, I know that what goes around comes around. I get a lot of good stuff happening to me as a result of sharing good information that works. So the first thing is to try to define my purpose and what I'm doing. And I've written it here. It says, my purpose is to empower my fellow traders and investors with the knowledge, belief, and confidence instilled in me by the master, Tom Williams. I want all who connect with me to be consistently profitable in the markets, to be happy, and to help others know the truth about the markets, the herd, and the smart money. Now, when I look at that statement, I know every day I'm living up to that statement. I know from the feedback I get that I am sharing the truth about the markets, and I think and I hope you would all agree with that statement. So then I write my own mission statement, which is nothing necessarily connected to trading at this moment, but it all forms part of my plan, and I always have to read this to remember what I'm trying to achieve. So the mission statement, first of all, this is something I say to myself every morning. As soon as I wake up, these are the things that I want to achieve. So I'm very grateful for everything I have today, and I gratefully expect more to come. That's a very powerful statement in its own right, and I truly believe in that. I am grateful for what I've been given. Tom said to me last night, he said, there's not many people, Gavin, who have the ability to communicate like you do. And didn't I, Tom? I said, I didn't really think that. He said, well, it is a gift. It must be. So I'm grateful, and that's a good place to start before you start trading. Be grateful for what you have. I will share the information imparted to me by Tom Williams with my fellow brothers and sisters who seek me or connect with me, and I mean that universally, by the way. We're all brothers and sisters on this planet, whether we like it or not. So I want to share information that I know I have a responsibility to share because Tom taught me everything I know pretty much. I will make money in the markets. Not I might, not I think that I can, I will. These words and these statements that I make to myself each day are very powerful. Your mind is always talking to itself. Be very careful what you tell it. You've got to make positive affirmations to get positive results. So I will excel at trading, and become a hedge fund manager in 2 years. I wrote this trading plan about 2 years ago, so I know I'm already well on my way to achieving that. I will act with integrity, honesty and fairness in all my dealings with others. I will achieve my monthly and yearly financial goals and will always control my own destiny. Many of you in this room, I know, run your own businesses and you control your own destiny. I control my own destiny. You know, I don't have a structured working week, except when I'm doing mentorship courses like this. I know I've got to be here at midday to do the mentorship course, but I have created my own ability to be free, to be financially free, and to also do what I love doing. I mean, a job is a job if you don't like doing it. A job that you don't like doing is exactly that. It's hard work. But if you love what you do, as I do, then suddenly you're not working. You're just doing what you enjoy. So I will achieve my monthly and yearly financial goals. That's an important statement. Very, very important. I will travel the world and teach what I know to others so they too can become financially independent. Hey, I've just come back from a complete world trip. I've met some really, really nice people in Sydney, in Kuala Lumpur and in Singapore. What great, great friends I met. And I've got some very good pictures of the people I met. And, you know, I went down to Bondi Beach. I remember that well, with the intention of going surfing so we could put some pictures on Facebook. When I got there, they closed the beach to surfers. So luckily I'm still here to tell the tale, but it was like 10-foot waves. And I don't think I would have lasted very long, to be honest. I will connect with other like-minded people who have the same desires and aspirations that I have. Well, there is a saying, birds of a feather flock together. It's very true. In this business that we're in, the trading business, there's a hell of a lot of snake oil. But there's also the truth. And it's very difficult for the trader and investor out there to know what is a truth that they're being told and what is complete rubbish. But I'll just warn you about a few snake oil tricks. If you're ever told by a salesperson of a software company that if you buy their software, you're going to be guaranteed 80% return in the first year, then they're lying to you, because that's not true. And I've been to several seminars where these snake oil salesmen come up and show all these wonderful figures to people and say, you can have all of this. But it's a known fact that 90% of retail traders are not successful in the market. And that's because they're simply uneducated. You in this room today and listening to this recording have made a decision to educate yourself. And you know something? I learned long ago that by investing money in my ability to learn things, I've been on a lot of courses with Anthony Robbins. Some of you will know Tony Robbins and other motivational speakers. And I realized that helped me to become the sort of person I wanted to be. So I've said here, what is my mission? To live a purposeful, meaningful and enjoyable life and enjoy all I have and graciously seek more of what I want. To love my friends and family and be a good father, brother, son, boss, friend and teacher. To understand that the universe is abundant and to know that every single person on this earth is important and should be treated as such. To understand and master the universal laws and always connect with the higher power and know that I can empower myself and others to have a great life. But I never forget, bulls make money, bears make money, pigs get slaughtered, money never sleeps. Now, can anyone tell me which film that came from? Anyone got any idea? And I'll tell Tom about this in a minute. Yeah, it was. Bulls make money, that's right, Wall Street. Bears make money, pigs get slaughtered. Little and often. Money never sleeps. As Tom taught me, the professional money, Tom, never go to sleep on the job, do they? And that is why it's very, very, very important to realize that when you see low volume, okay, very low volume, that's not professional money going to sleep. They're just not active for a reason. Remember that. So we heard from Matt James this morning. Remember Ali Baba and the 40 Thieves. Now, I hope you all know that story, but it's the story of Ali Baba. And he finds a cave full of gold. But what does Ali Baba do? Does he rush up with a donkey and a cart and load his donkey and cart with gold and thank the lucky stars that he's now a millionaire? No, he's intelligent. He understands that the cave with all this gold would attract a lot of attention if he went down the hill, the mountainside, with a cart laden with gold. So he decides to be clever. He says, well, look, I'm going to take one piece of gold each day, and I'm going to slowly amass a fortune so that no one really notices. And that's what he does. But after about a year, his cousin Cassim has noticed this, and he says, Ali Baba, how are you doing this? And he says, well, Cassim, if I tell you, you've got to promise me that you're not going to tell anybody else, and you mustn't, take all the gold that I'm going to show you. Just one piece a day, and you can amass the fortune that I've done. Well, what does Cassim do? He sees the cave. He can't believe his luck. And when Ali Baba goes back down to his house, he comes back up to the cave with his cart, and he loads the cart with gold. He can't believe he's a millionaire all of a sudden. And as he's going down the mountainside, of course, all the gold rattling on the cart, 40 thieves see what's going on, and they rush down the hillside and kill him and steal all the gold. Now, what's the relevance to the market? The market is the cave. It's full of gold, and you have the key. But if you rush in on day one with a $10,000 account and think you're going to turn it into $1 million because you've been told by some snake oil salesman that that's what you're going to do, you will lose all your money to the market, and maybe more. I've met traders that have lost their houses, cars, their families, all because they didn't respect the market. So remember, the market is the cave of gold. But don't be greedy. I know that in Wall Street 1 and Wall Street 2, Gordon Gekko said greed is good, but in the market it is not. Greed is bad. Greed will put you in trouble. And I learned very early on that you've got to respect the market. Now, I'm going to bring Tom in to talk about this next statement. The market is devious, and many times you will buy on good news only to lose money, sell on bad news only to see the price soon afterwards. That's because the smart money understand crowd behavior and take full advantage of the herd. So beware of the news. Tom, how important is it, do you think, for traders and investors not to get greedy and to wait for principles and to wait until the setup arrives?
Well, you're better off just take it small and often if you can. But the market is devious. It seems to automatically behave in such a way that if you feel fairly certain it's going up, it'll fall. And if you're fairly certain it's going to fall, it'll go up.
It's funny, isn't it? It's going up now.
Well, that's right. The S&P's been marked up at the moment. It's not open for another 20 minutes or so. But it certainly looks like some weakness entering into the market. The S&P 500, but we'll see. So what happens when? But remember, when it opens, they love to whipsaw the market, catch all the stops above, even catch the stops below, confuse as many trades as possible. The market seems to automatically behave in that way. Whether it's a professional sitting there deliberately pushing around to confuse you, I'm not sure exactly if that's totally true, but the market seems to automatically behave in such a way. And when you think about it, that must be so, because you have to have more losers and winners for these markets to work. You can't get these up moves and down moves if everybody's making money. Somebody has to lose and somebody has to win. And of course, we know traditionally that trading these futures is a dangerous place. And they even say 90% of people that attempt to trade this will lose money. So it just shows you how important it is to figure out or recognize a principle when it appears. And that's why I say wait till your bus comes with your number on it. You're fully aware of what you're doing. And then you'll make money. But otherwise, you're just going to dive in. And because you've got this risk, the trouble is with men especially, they have this built-in desire to take risk. Of course, it comes from the cave, doesn't it? Caveman days. When you stood at the entrance of your cave with your spear, and you needed some food, you had to be prepared to take risk, to go out there and find food. And but I say the women are different. They have a different attitude. That's why very often they make very good traders. Different attitude to men. But men, they enjoy taking risks. And, you know, and they do the same thing in the stock market. But if you want to make money consistently, understand the principle involved and be very careful what you do, and don't listen to the news. Well, listen to it by all means, but realize that the professional money will whipsaw the market on that news. And I mean, right now, look, it looks like a sign of weakness coming in to the S&P 500. It's been marked up, but it looks like it's hitting supply at the moment. So believe your charts first.
I saw that, Lance. Very funny. So, let's move on.
What's Lance saying?
I'm not going to repeat it in here. It's quite funny. I'll tell you later. He's got a good sense of humour. All right. So then I have to look at what my strengths and weaknesses are. Now, this is personal to me, but everybody, I'm sure, who's a trader will be able to relate to some of these things. So first of all, I'm analysing myself, and I do this every month to look at what did I do well this month and what didn't I do well. And there are things, some months we have good months, other months we don't have good months. But, you know, overall, life is like a chart. Hopefully, you're going in an upward move and your chart's in an uptrend in a bull market. That's what we want to see. But at times during your life, you dip and you come to the bottom of the channel. And other times you get to the top of the channel. So I'm always looking each month, where am I in my trend channel? My life is my trend lines. I want to keep in a bull market. I never want to be in a bear market. Have I been in a bear market? Sure I have. Yeah, we've all, I'm sure at times in our life, had a downward turn or circumstances, things have happened to us that are negative. But I've learned that through the process of correct thought and being mindful, you can actually keep on an upward trend. Tom is probably one of the most positive people I've met. I don't think I've ever seen Tom down about anything. No, I don't think I ever have I? 10 years of knowing you. I can't remember once where you've... The only time Tom ever complains is when there's no food around. That's the only time. That's the only time I can... He's nothing to eat or he's hungry. If he's hungry, you've got problems. But overall, he believes in the principles. Now, belief is a key part of success. Wherever you are in the world right now, you must believe in your ability to make money and be happy. It's a belief system, but it has to be trained. Most traders that lose money talk themselves into it, which is quite amazing. They don't understand the power of their inner voice, so they misuse it. And I used to do it. So look, I'm perfectly guilty myself of going through that process. So now I look at my trading plan and I say, what is some of the strengths that I can focus on that's going to help me make money today? Well, I have knowledge. Okay, I've written 2 books. I'm writing a 3rd book. So knowledge is very important to have. And you are now sharing in this knowledge. I have skill and patience now. And I say now, because I didn't always have this, to succeed in the markets. Now, how did I develop the skill? Because of Tom sitting next to me. Every time I made a bad trade, he'd whack me over the head basically, or just look at me and say, why on earth did you do that? And I became patient because Tom, when he's trading, doesn't rush in and take every trade. He's extremely patient. And he'll wait and wait. And I'll say, Tom, come on, look, there's an end of a rising market, or there's this. No, he said, I want to see the confirmation come in to confirm that that's it. And it is about confirmation. VSA is about identifying smart money activity followed by confirmation of what they're trying to do. That's really what it's about. So I say here, I'm able to read the charts and follow the smart money. And so will you be able to do that? If I was to lose my account, okay, and I've got several accounts, but if I was to lose one of the accounts, and it did happen to me, it would not affect my lifestyle or cause financial hardship. Now, I will share with you, I don't think many of you know this, but I had an account with PFG Best, Peregrine Financial, and unfortunately, I was subject to fraudulent. There was a fraudulent case, basically, and the owner of that company stole $200 million, of which some of it was mine. Now, did that make any difference to my situation? No. No, because I don't trade what I can't afford to lose. And nor should you. You should only trade money that if you lost it all would not affect your family, your lifestyle, your property. I mean, one guy I met, who will remain nameless, who's now doing very well, by the way, I met him and his family. I was traveling down through the United States to go on holiday to Florida, and we stopped in a part of the US, and we met this customer, and he'd only just become a customer, but he was desperate. He'd lost nearly $500,000 in the previous 12 months in the market, and his wife was close to divorcing him. And I actually decided to meet with him. Okay, I don't often do that, but it's just that I happened to be in the area, and we sat there, and he explained to me what he'd been trying to do in the markets. And the word reckless and gambling were just two things that I immediately thought in the first 30 seconds of meeting him. And I asked him about his trading plan, of course he didn't have one. I asked him about his strategy, he didn't have one. But he loved the thrill of being in the market. He was a thrill seeker. So I took him to one side when his wife was and his daughter were in the toilet and said, listen, you've got to reassess everything and press the reset button today. And he said, what are you talking about? And I said, if you don't know that what you're doing is self-destruction, then someone's better tell you. I said, but the wonderful thing about being a human being is you can press the reset button right now. And how you do it in your trading is to stop trading immediately. Don't trade. Go and look at a trading plan for yourself, of which I helped him, and start to focus in on what you really want to do. He was looking at about 40 different markets. He had 12 screens. He thought he was the big trader, but he was losing his money. He was losing all his hard-earned money, and it was starting to affect his lifestyle. So I said to him, you know, if you keep going down this route, you'll have nothing left. So you've got to reassess. That's what he did. And then he wrote a trading plan. And suffice to say, he's doing extremely well. Now, that was a year and a half ago that I met this guy, and I do keep in touch. But it's very important to you know, when you're trading these markets, to remember that you're putting your money at risk. No, very few educators ever talk about this, because they always want to, you know, make things sound really rosy, that you're going to be a millionaire, you know. But I want to just explain to you that when you put that trade, you click that button. A monkey can click a button. Doesn't take anything. It's so easy now to be in the markets. It's literally the touch of a button. But knowing why you're doing it, knowing when to do it, knowing how to manage your emotional responses to what you're seeing, are what makes the difference between a poor trader and a professional trader. So I put here in my trading plan, I have the support of my wife in my trading. That's very important, because, I mean, it's quite, I laugh, but Dallas, doesn't she? She likes to gamble on the horses sometimes. And she says, oh, well, you know, trading's gambling. And Tom and I laugh and say, no, we're not gambling at all. We actually can read the market. We are like the card counters going to Vegas, because we can see when the smart money are doing something, and we can logically explain why we're taking a position in the market. And when your money's in the market, you have the ability to manage it. When you put your money on a horse and that horse runs, you can't take it off. If the horse comes out the gates and falls at the first hurdle, you're done. You've got no control, because that's gambling. That's reliant on luck. Although I must admit, Dallas does have an uncanny way of picking winners, doesn't she? Yeah. So I have the support of my wife. That's important. I've created multiple income streams for myself. That's through business and investments. So I'm not reliant on one thing. That's called hedging your bets, if you like. I make sure I've got different streams of income coming in. I believe in myself, and I'm grateful for the abilities I have. Now, weaknesses. Now, I try not to focus too much on weaknesses, because although I know I've got them, everyone does. We're not all strong. We always have some weaknesses. And one of mine can be this: impatience. I want to get in the market. I want to trade. And, you know, it was one of the most difficult things for me at the beginning to sit on my hands and wait. But I realized that to be a fund manager and to be a professional trader, you've got to be patient. There's always tomorrow. Everyone wants to do things now as though today is the only day, but hopefully, touch wood, there is a tomorrow. And I've realized that actually the compound effect in trading, I don't know how many of you have heard of the compound effect? Does anyone understand what I mean by that? The compound effect. There's a good book on it as well, actually, called The Compound Effect. What it means is you can start compounding. What does that mean? Well, if you took a $5,000 account today, right, and you traded one contract with good risk management and discipline, and let's say you had that $5,000 account, by the end of the week, if you'd just made a couple of $100 in that first week, so you hadn't lost money, you'd made money, the next week, if you did the same thing, you'd have $5,400. The next week, you'd have $5,600. And the next week, in month one, you've made $800. Now, because of the way the market works, as your account grows, and assuming you're making profit, you can take that one contract trade and turn it into a two contract trade. And suddenly, you're doubling. If you're doing the same strategy, each time you take a trade, you're doubling. Now, I won't go into the whole compound effect, but there's a very good book on it, which I'll type in at the end. Remind me. I'll have to find out what it's called. I haven't got it with me. It's at home in my storage box in America. But it's a very good book on compounding. So going back to the weaknesses then, I try to be patient. Now, the other thing I'm not good at is multitasking, trying to look at, I began trading by trying to look at about 10 or 15 different markets at a time, a bit like that guy I just told you about. And then I began to realize that that was not working. Now, let's ask Tom. In your trading syndicate, of which made millions of dollars, how many markets and stocks would the syndicate go and look at, and why?
Well, I remember because I used to do all the charting, bring the charts up to date. There was no computers, of course. What we had was hand-drawn charts. They were about 6 foot long, and when you got to the end, you just bought more paper and stuck it on the end, and you had a roll ruler, which I've still got here in the drawer, and you draw the high-low closing volume from figures that your usually women used to take off the ticker tape, which we had in the office. You all remember what a ticker tape looks like. It was like a big jam jar turned upside down. There was some mechanism clicking away inside, and out spewed a tape with the figures on. And that's where we got all the figures off. But they only had 12. They only followed 12 stocks.
Amazing. Just 12.
12. And I know because I kept them all up to date. And there was about 50 guys in that office working various times of the day and whatever. And, of course, they traded their own money and others. And you'd often see these well-known film stars walking in, and they'd have a case probably full of money that they weren't probably paying too much tax on, and they'd give it to the boys, and they would enter it in the stock market for them.
Was it Kirk Douglas came in once, wasn't it? Kirk Douglas?
Yeah, Kirk Douglas came in, yes. Clifton Webb, people like that who were well known at that time. Because they were slap bang in the middle of Beverly Hills, that's where they lived. And like now, I suppose, putting into the banks didn't pay too much or wasn't worth it. But they knew that if they put it with the syndicate, they'd make some money. And the syndicate ensured that they did. But they only had 12 stocks that they were looking at. One was Teledyne, which I mentioned the other day, headquarters in Beverly Hills, a company. That was a favorite with them. And they would accumulate the underlying stock until they had control of that stock. And then they'd mark it up and eventually sell it on good news at the top. In other words, they sold higher than they bought it for. And that's how they made their money. In those days, of course, there was no computers. There was your trading was limited. You couldn't trade. There was no indexes. Although you had indexes, you couldn't trade on them. And there was, of course, the commodities and forex markets. And that was about it. They didn't like the commodity markets. They always told me it was too dangerous because they naturally used to trade on the cautious side of things. And when you accumulated underlying stock, you were never under any pressure because you knew more or less exactly what was going on with that stock. But there was 12. That was all.
Yeah, now I have to say I found that fascinating that he only specialised in 12 stocks, and as I'm going to show you in a minute, the ones I specialise in is about 12. So the other weakness I have is over trading. How many of you here think that sometimes you over trade these markets, that you just don't let it go? You heard Matt talking today, a professional trader, that he actually only trades in the morning for a couple of hours and then he goes off and does something else. Yeah, okay. A lot of you saying, yes, I over trade. You know something? The reason for that is over trading can cost you a lot of money. There's nothing more frustrating than making 2 or 3 winning trades and making $500, and then you make that final trade only to watch the market go against you, and you say, well, I made 500, I can afford to let this run, and suddenly you don't just lose the 500 that you've made, you lose more. How many of you, and let's just be honest, how many of you has that happened to you, where you've made some winning trades, you think you're on a roll, and then suddenly that last trade, you've given it all back and a bit more? Has that happened to anyone in here? But you'll remain nameless, don't worry. I'm not going to type in, but I just... Okay. All right, that's just about everyone in the room that's typed in. Okay, so over trading is a problem, yeah. And I've learned that actually, little and often, okay, this week you've seen me I took 2 trades that you saw me take. Okay, one of them netted $400, the other one was $260. But that's it, little and often. Hopefully today there'll be another setup. We'll see. So, but what are the opportunities? I always look at again, I'm trying to be very positive in everything I do. Most people who meet me will say to you that I've got a lot of energy and I'm a positive person, but there's a reason for that. And I look at the opportunities that I've got, and they're here. First, I'm financially stable, and each year I think personally I've gone from strength to strength. Through the knowledge imparted to me by Tom Williams, I've created many opportunities, and I've connected with a lot of wonderful people, including all of you out there. I know the universe is abundant and that I can have everything I desire if I believe and take massive action on my thoughts of prosperity and happiness. That is the key. You've got to believe, and then you've got to take action. They're the 2 things in human life that if you can do both of those, believe in something and then take action on your belief, you'd be amazed that great things can happen. And threats, I don't see any threats because there's too many good things going on. So I don't see any threats here, at all. So, moving on. I then set my goals. What am I trying to achieve? Okay, what am I trying? This is before I've even got to my markets yet. Okay, so this is all personal and important to me, but I have to always remind myself, and that's why this is a written plan. So personal is to live a purpose-driven life and meet other great people who have the same desires and aspirations that I have. To have a great relationship with my wife, Laura, and all my children, family, and my friends. And to empower all who connect with me so that they may truly understand how precious life is and enjoy every moment. Okay, and that's very important, that statement. And I think I do that. But in my trading, to become one of the best traders and fund managers in the world. Now, I want to bring Tom in here because 10 years ago, when I first met Tom, I knew nothing about the stock market at all, absolutely nothing. And Tom actually, I remember saying to me, he said, well, that's not bad then thing really, because you're unpolluted. And it wasn't until 5 years ago, really, that I began to start picking this stuff up and really practicing it. And it wasn't until a few years ago, before I wrote my book, that Tom turned around one day during dinner and said, you could be, and you will be, one of the best traders in the world if you want to be. And I never really considered that could ever happen until I met Mike, who's going to be the other hedge fund manager with me, who actually is the 4th biggest trader in the world. So Tom, how important do you think belief is in being successful, not just in your life you've been successful, but you have a strong belief system? How important is it, do you think, for everyone listening to have a strong belief system in not just the principles, but their ability to make money?
Well, that's obviously very, very important.
I mean, I know the only reason why I was, should we say, succeeded in life is that I'm persistent. But that goes hand in hand with my sun sign. I'm a Capricorn, the goat. And they're known to be very persistent. Stubborn. Dallas says, that's my partner, says I'm stubborn. Right? If I don't immediately do what she orders, I'm stubborn. You know, and that's it. But I've always been like that. And I can't help it, just the way I am. And as soon as I saw this stock market business, I thought, right, wham. And I suddenly zeroed in on it, and I knew that was for me. But it's stubbornness as far as I'm concerned. But Gavin is a different kettle of fish. No question about it. He's got a very high, active, intelligent mind. There's no question about that. And I've noticed that when he trades, he's not frightened to jump in the market. But the main thing is that if he's wrong, he's out, which is the key to successful trading, is that if the market goes against you, then you should go out. For example, if you see a test and you know the market should go up after a test, if it doesn't, then it's a failed test. Get out. Don't think, oh, I'm going to wait, I'm going to pray, I'm going to hope and see if it goes up. Just get out, because you're on the wrong side of the market. And that's the thing that you've got to guard against. And if you stick to the principles, learn the principles, how to recognize them, right? Even if you see what looks like a principle and you go in to trade and it doesn't actually work, don't worry. It's just one of those times, it's like a failed test. The market's probably so weak that even when the principle appeared, it couldn't work. I described it in the past like there's a dying man in the desert dying of thirst, right? Somebody comes along with water. They give him some water, but he's so far gone that the poor guy can't even take advantage of the water, and the poor guy dies. So that's what I mean by the market so weak, it can't take advantage of any apparent strength that appears. And a test is a sign of strength normally, but you see that in weak markets and there's no response. So you don't need to be in the market if a principle that you know should work doesn't work. But that'll all come to you. Don't worry, it'll all settle in. I had a telephone call one day and there was some guy, so I was lying in the bath having a cigar, and it suddenly all came to me. He said, now I know what it's all about. So he was so excited, he was really, really happy that he suddenly seen the light, as they say. But it will come to you. Persevere, have persistence, and you will get there.
Yep. Thank you, Tom. Yeah, and believe in the ability to make money and believe in the principles. So here's some of the things that I wanted to achieve is to become, to build an automated trading system that uses VSA, and that is already happening. Okay. To open, trade, and manage an institutional hedge fund, that's happening. To improve upon the current version of TradeGuider and build an institutional trading platform, that is happening. To clearly identify VSA principles when markets are being manipulated and post YouTube videos in advance of the move to warn the uninformed traders and investors, that is happening. And to improve my returns. Oh yeah, so Tom's just got a chart up here of the S&P, and bit of weakness. He said some supply hit the market, and it most definitely has, and we'll come and look at that when we finish here. So this is now getting into the actual markets that I choose to trade. Okay, now recently I've been very actively trading that pair. So I trade the currency futures, not the spot forex. Okay, the currency futures contract of the cross pairs. Now, very recently I've stuck to just one pair, which is the Aussie dollar. I have traded the British pound. I like that, although that has been more difficult to trade, I think, because it's been stuck around the 1.600 area. Matt specialises in the euro and the euro dollar. And Matt is going to be doing, we're hoping, a Forex trading newsletter based on VSA with Tom, as well as a morning market analysis to show you where the numbers are that need to be, we calculate the pivots. He's going to do all that for you. And we're going to actually launch that service in the next few weeks. So I like to trade the currencies, but I don't trade them all at once. Generally speaking, I will trade, you know, the Aussie dollar in the evenings US time. I used to trade, obviously I was living in Chicago, so I would be trading at different times. It's now a lot easier for me to trade on this current time zone that I'm now in. For those of you who don't know, I've now permanently moved back to the United Kingdom to run the fund, and I'm actually bringing my wife and kids over in the next couple of weeks. So I'm actually back based where I was born. I'm living within 5 miles of where my childhood, where I grew up, which is very, very strange after living in Chicago for 10 years. I woke up the other morning and there was a donkey in my garden. Don't ask why, but there was a donkey eating the shrubs in the garden. Quite funny. But these pairs, all of the currencies, the reason I trade the currencies is because they trend. They're very trending instruments. And they're a good place to start, because if you're, say, trading a $5,000 account, okay, which is an average size account for most retail traders, one tick on the Aussie dollar is 10 US dollars. Now, the question came in earlier about the Infinity platform, and you are all entitled to this and the VSA plugin for it, free for a whole month. In fact, it wasn't 2 weeks. I got that wrong. Let me show you what I mean by that. Okay, so you get, as part of your course fee for doing this, we're going to give you the platform, which is the charting platform, the trading dome that you saw me take the trade on yesterday. And you can also have, for a whole month, okay, for 4 weeks, the VSA plugin, which works with the Infinity platform. Okay, it's called a plugin because what it does, it's got charts that have the VSA studies over them. Can everybody see the Infinity AT platform? This is the live account that I trade, 4855. You should be able to see it running now. You should see to your left the trading ladder, and you should see this. And behind me, it's loading the charts. So there is a charting package that comes with it, and we have built in the VSA indicators into this package. If you want a copy of this platform with the VSA studies, email Jim. I'll just type it in here. In fact, let me come back to that. I'll get you the email address to email, and you need to state in the email that you're on the mentorship course with Gavin and you would like the 30-day trial of the Infinity platform. Okay, it's a free trial. Okay, and the charts haven't come up yet. They're still loading, Day. Okay, and then the person's name is Jim Cagnina, is the guy that I'm going to send you to. His name is Jim. I'll type it in here. Jim Cagnina, and he works with Infinity Futures, and they've agreed to give you the platform. Okay, and they will actually, I'll put his email up in a minute. Now, what is a platform? Just very quickly, for those of you that don't know. This is what we call the trading dome, the DOM, the DOM. Okay, this is the depth of market. Okay, I don't know what's going on here, but this is the depth of market. We can see the Aussie dollar here, 6AZ2 or Z2, depending on where you are in the world. And we can see we're trading at the moment at a price of 1.0293. Okay, now this has come off rapidly, this market, hasn't it? Because of that signal. So it looks like this will probably fall with the S&P, which is currently looking quite weak. Now, if I want to put an order in, I have a quantity up here of contracts. And one contract, if I go into the market and sell it, will make or lose me $10 per movement of tick, just to be clear. So I can either make or lose, depending on obviously whether I'm short or long. If I buy, I'm saying that the market's going to go up. If I sell, I say the market's going to go down. And that's what we'd look to do. And yesterday, I sold 2 contracts for $20 a tick and made about 18 ticks on the day. All right? Okay, so let me go back to the trading plan. We'll come back to that in a minute. And we'll just let that load. Okay, so going back to the other markets that we look at. Now, Tom and I like to trade the E-mini S&P. And Terry, yes, these are all traded on the exchange in Chicago called the CME Group, Chicago Mercantile Exchange, based in downtown Chicago. Here, these are the main markets that I specialize in, but recently I've been trading a lot on the NASDAQ. And the reason I chose the NASDAQ, the E-mini NASDAQ, okay, and the symbol for that is NQ, is because it's the leader of the other markets. It moves slightly quicker than the other markets around it. So the NASDAQ, the NQ, when we finish off with this trading plan, we'll go and look at the NASDAQ and we'll look at the S&P. Now, Tom specifically likes to look at the E-mini S&P. I think that's your specialist market, really, isn't it? Would you say? Yeah. He's more or less a specialist in the S&P. If we're taking trades together, Tom will generally speaking, will trade the E-mini S&P. So you do have other markets. Rita specializes in the Dow, the E-mini Dow, and the symbol for that is YM. But why does she just follow one market? Because she makes money in it. Simple as that. Someone said, why does Rita just follow the Dow? Because she's become familiar with the personality of the market. She's become familiar with the personality of the market, which is actually quite interesting. And they do have personalities. I don't know why that is. I don't know if Tom wants to comment. Why do markets have their own personalities, Tom? Someone's just asked the question, so hold on. Here's Tom.
Well, the obvious reason is that markets keep to a personality because it's the same traders trading it. They specialize just the same we're telling you to. And it's the same traders. They don't switch. I know this. You take commodities. If you're a wheat trader, you wouldn't dream of trading another commodity. You just wouldn't even consider it. You know, you're a wheat trader and that's it. And it's the same thing with these other markets. It's the personalities of the underlying or the traders, the serious money behind, because their personality is embedded in there and they tend to do the same thing over and over again.
All right, now let's move on to the commodities. Now, I'm trading the futures market, not the cash, but the hedge fund will be trading the cash. But we trade the futures market, and it's the E-mini futures, Lance, that's correct. So we're trading the E-mini futures. And there's lots of benefits to trading the E-minis as well. When I look at commodities, you probably know I'm a bit of a gold bug. I love trading gold because I do the opposite of the herd. The herd always get it wrong when it comes to gold and silver. Gold and silver are heavily manipulated. And tomorrow I'll show you who does it. I'll talk about how they do it. These two commodities are controlled by the governments around the world, specifically the Federal Reserve and the European Central Bank. They make sure that the banks do their bidding when it comes to moving those prices around. But why is that good for us? Because we can see when they're manipulating the market. You don't need massive margins on futures. No, you get massive margin, but you have to, yes, you trade with margin, Lance, absolutely. So you can put into the, you can be in the market with, you know, 2 or 3 contracts, and you are in the market. I mean, the E-mini futures market is one of the biggest markets in the world. It's a massive market, and we'll talk a little bit about the different prices of all of these. All of these have futures contracts that are traded on exchanges. So all of these commodities that you see that have a real price also trade on the futures markets. And one of my favorites has been coffee, and I'll show you why later. And then here are the stocks that I personally specialize in. And there's reasons for them. Basically, JP Morgan is my favorite. Okay, if you look at JP Morgan and you look at it's a sizable bank, obviously, but it's really the JP Morgan stock is controlled by some specialists on the exchange, and they deliberately mark the price up when the news is good at about $48, by the way, and then mark it back down to about $25. And it's so obvious. It's so obvious. I mean, you could see what they're doing. To just have a look at that stock. But obviously, some of the others you probably all know, British Petroleum, BP, pays a good dividend. Bank of America, because again, like JP, it's manipulated. Apple and Google, because they are leaders in the market. Research in Motion, which makes BlackBerry because of its volatility. AIG for the same reason. Caterpillar for the same reason. We find that with Caterpillar, we have the same thing. And also, then you've got Goldman Sachs, Westport, Microsoft, and Cisco. So those are the stocks that are really in my portfolio. And each week, though, okay, I actually look and do a scan using the end-of-day software to see if any of these appear in the scan. And we'll do a scan tomorrow. And then I look to see if there's any principles. And all I'm looking for is Yao Ming volume on the weekly chart. I don't worry too much about daily. I look for Yao Ming bars on the weekly charts, and you should start looking at these because these stocks do get heavily manipulated. Then, what are the strategies we use? Okay, this is something now we're getting into a bit of trading detail here. So on every chart, look initially for Yao Ming bars on the highest time frames possible. A Yao Ming bar is an ultra high volume bar. The higher the volume, the more potential for a large move. What do I mean by that? If you get a very ultra high volume bar on a weekly chart, you're going to get a serious move in that stock or whatever instrument you're looking at. Now, we had a Yao Ming bar in gold in August of last year on a monthly chart, and it knocked gold down 22% in 3 months. That's why you look for Yao Ming bars. I then begin what I call the 25 bar count. So once I see it, if it's on an up bar, I'm looking to short, obviously. So it says if going short, because the ultra high volume was on an up bar, I then look for no demand bars and up thrusts. Again, we're looking for our bust to arrive, aren't we? We're looking for confirmation. This is especially powerful if the no demands and the up thrusts are at the same price level as the ultra high volume bar, which will act as serious resistance to higher price. Number 4, if going long, look for ultra high volume on a down bar. Narrow spread is very strong. Remember bag holding. Then I look for stopping volume as the trend begins its up move and no supply bars. Wait for a change in behavior of the market. That means basically the trend is changing. Identify distribution at the top and look for that mushroom. Okay, so that's important. Short as the mushroom declines at the far edge of the chart. Identify accumulation at the bottom and look for a saucer. Now, we haven't really talked about that at the bottom, but what happens is the market, as it's accumulating, forms a saucer shape like that. Okay, and in here, so let's say here, you have your very high volume down bar, and then you'll see the market move sideways very often. It just goes like this. But when it begins to move above the top of that bar, and this saucer starts to go up, so you've changed behavior, I'm looking to take a trade in between there and there, anywhere here when I see no supply. And the reason for that is the market's changed behavior. The market is showing me a reason to be looking for long trades. Short on any core VSA sign of weakness. Look for a trend change in 3 time frames. Go long on any core VSA sign of strength. What do I mean by the cores? I mean that stopping volume is a core VSA sign of strength. No demand is a core VSA sign of weakness. And then, I know I get asked this all the time, what is the time frames we should look at? So they're different for every market, and and this is for my strategy, and this will also be for the same strategy we use in the fund. So on the currencies, I use the 240-minute chart as my highest time frame. My key trending time frame is a 60-minute chart. That's where I'm looking for the key trends to appear. If I'm going to be in the market for a period of time, possibly several hours, I'm really looking at the 15. But what you've seen me trade recently is the 5-minute chart as the market moves. And in fact, that's quite key, those time frames. On the E-mini futures, okay, so that was for the currencies. On the E-minis, daily chart for me is a key chart because the daily high, low and close, you need to mark those out every day because the market will do something at the high, low, close. And when price action is at the high or the low or the close, it becomes relevant. Now, this morning, Tom's going to show you a chart of a signal that appeared, and he said quite clearly, supply is hitting the S&P, and it knocked it down 4 points. Now, I'm not trading at the moment because this trading plan's too important to try and look at charts at. It's a very important document because if you look at what it says, and you'll get a copy of this, yes, you will get a copy. The daily chart gives me my framework for the trading day. Then I'm looking for a trend alignment, and I use a 240-minute and a 60-minute chart. So if the 240 minutes going down, if the 60's going down, and the daily's going down, I'm going to start looking for shorts because I can see that the trend of price is going down. And then when I'm trading intraday, I use a 15-minute chart that Tom likes to look at. He's got that up now, to look for my Yao Ming bars, my ultra high volume bars. And then the 5 and the 3-minute chart give me entries. For the commodities, I'm more of a swing trader. So I'm looking to get into a position and hold it for longer. I do trade gold intraday. I do trade silver, but I tend to want to look for longer term position trading. And so I'm looking at the monthly chart, followed by the weekly, followed by the daily, and then the 4-hour chart. And that gives me a very, very clear identification of where the market's going. Okay, so Lance has got a question. Let's open your mic. Yeah, hey Lance, shoot away.
Yeah. Gavin, you know when you're looking at your 240 chart and your 60-minute chart,
yep,
and they are all pointing down, so to speak, are you not bothered whether the 15 and the 5 or the 3 is going up? As long as does that not matter? As long as the bigger time frames are all looking down, the sort of 15 and 5 minutes, is that irrelevant really?
Well, what happens is this. If you're in a downward move, right, so the market's falling on the 4-hour chart and the 60-minute chart, what tends to happen is if the market's going to be marked up, the 3-minute, the 5-minute will change trend, right, because they're marking the price up. So then what I do is I look at the 15-minute chart to see at what point that markup is either a real one or a false one. Now, if it goes up on the 15-minute chart and there's no demand, so there's no volume in the up move, and the 4-hour chart is steeply down, I know I've got a short trade coming. Then I go down to the 3 or the 5-minute chart and wait for that change of behavior to happen. And what you'll find, we'll actually look at some charts in a minute and show this. What you'll find is the bigger time frame is like the it's like the tide coming in and out. Okay, the market is like a giant tide. It goes in and it goes out. In other words, it moves in a zigzag. Now, I liken the market to a river. It flows, doesn't it? Now, I want to look at the flow of price. If the flow of price on a 4-hour chart is heading down and has been for several days, then until I see stopping volume on the 4-hour chart or a serious sign of strength like bag holding, I'm going to have to assume they're going to keep marking it down, yeah? So during those waves, I'm going to draw a trend channel on the 4-hour chart. Now, I know at the top of that trend channel in a down move, I'm going to start to see principles appear on maybe the 15-minute and the 5-minute charts. And those principles that I'm looking for are up thrusts. They're the best one. If you see an up thrust on a 4-hour chart in a downtrend, you better start looking for shorts. And then, as we'll see, because I'll do some chart examples of this tomorrow as well, what we then look for on the smaller time frame is although the market will definitely be going up and there'll be green diamonds and green bars, I'm looking for the change in behavior on that smaller time frame to align me with the bigger time frame. So what you'll see is at some point, the 5 minute gives me the upthrust, then it begins to change down, then you see no demand after the upthrust, and then you know if you're short, you're in harmony with the 4 hour, you're in harmony with the hourly chart, and they're all going in the same direction. And that was the trade that I actually took on that Australian dollar yesterday. You saw me trade, because I could see the 4 hour was down, the hourly was down, the 15 minute. Tom said, hey, they're accumulating here. They were trying to stop the down move, and then we got that big markup. Remember the ultra high volume bar, and I thought, aha, they're marking this up artificially. The price is moving down. I'm going to look for any short. And what did we get on the 5 minute chart? An upthrust. And that's how I made the money. That make sense?
Yeah. Look forward to looking at the recording of that, yeah.
Good. All right, mate. Good
We'll
question.
talk about it tomorrow anyway as well.
Absolutely. We've got Dr. Gary Dayton coming in tomorrow, and then Friday we're going to do live trading all day, Lance. So we'll be able to do this live. But I'll get Tom to review the charts here before we go. Great. Good question. Dave says, don't believe anyone else on the planet will share this stuff, Gav. No, they probably won't. Yeah. Yeah, no, I see a few of you coming in. Okay, Gavin, can you explain again, how can one distinguish if distribution or accumulation is in place on in an up move, still before breakout, or down from the congestion zone, says Peter. Let me just look at your question. Can you explain again, how can one distinguish if distribution or accumulation is in place in an up move, still before the breakout, or down from the congestion zone? Okay, the way we identify that, Peter, is we look at the trigger areas, or what we call the ice, okay, which is where we're breaking through ice. I'll tell you what, Peter, let me show you that on a chart in about 20 minutes. I understand your question. Let me show you where we can define where all the trends are aligning for a trade, because yes, we do get into congestion. You see that quite frequently. The market goes sideways in different time frames, and there's no trade there. There's nothing to trade. So let me finish my plan here, and then we'll actually go and have a look at a few charts. So on the commodities, we can see I'm looking at a longer term trades. Stocks, again, stocks you can trade intraday, but I don't go anything lower really than a 30-minute chart. And the key for me is that one, the weekly chart. The weekly chart on stocks gives you the clue. That should be your main guiding light as to where the stock's going to go. Yes, daily charts are very important, but if we see a strong trend in place on the weekly, it won't change until ultra high volume appears. Google, we just saw it. The uptrend was rapidly broken. And that's because of that ultra high volume that came in. It was a gotcha bar, wasn't it, on Google? And then here's my setups with the numbers. Okay, now the numbers of these, I don't put numbers on these because they can come in different intensities, and you don't always get an upthrust followed by no demand. But these are what I'm looking for. You'll notice that everything starts with ultra high volume. William says, could I just go through the mental thought process of going from time frame to time frame? We'll do that in a minute before we leave. Absolutely. So I am going to overrun again here today, everyone. Sorry, we're going to go about 30, 40 minutes over. Again, I hope you don't object to that, but we want to get this information over to you. All right. Great question from Graham. If you had a mic, Graham, I'd open it, but I'll repeat that out. So here we can see that to go short, my favourites are these. Okay, I mean, that's why with gold it was really obvious. The end of a rising market, right? A really, really, really powerful signal. Tom, your favourite? Yeah. End of a rising market. Then after that, the buying climax. Okay, again, all of these first parts will be on ultra high volume. Okay, ultra high volume. And then we do get this happen a lot. Recently I've seen it. You get no demand, and then suddenly the trap up move, where they mark it up and then mark it back down rapidly. That's a gotcha bar, by the way, that one. So this last setup is based on low volume, and then massive volume as they lock you in to a bad move. Okay, everyone's typing in. We're very pleased that we're running over time. Good. To go long, Tom's favourite signal has to be at the top. Bag holding, right, Tom? at the bottom. Yeah, Tom loves that. We see stopping volume after that, and then no supply. That is a great setup. And you'd see these again in bull markets when they want to mark the market down. You'll find that you'll see these signals, even they may not be at the bottom of the trend channel. They may actually be in the middle of the trend. It's unusual, but you do see that. Bag holding followed by an immediate test and no supply. And again, what this is going to look like on your charts, just to remember, is you'll have a down move here. Then you're going to have big volume, and you're going to have a narrow spread on the bar. The next bar is going to close higher on decent volume. What you're then looking for is the market to begin a change in behavior, and then you're going to look for a down bar with very, very low volume. Okay, so it'd be, let's say that's gone up here like that. You get a down bar, the volume is very, very low, and the next bar is pushing up, and that's where you can buy. Yes, Goran, that's correct. I wait for a couple of confirmations. Yes, I do. Yes, I do. Doesn't mean you have to, but you're absolutely correct. I definitely do. Yeah, Terry says, is point and figure, we're not teaching that in this seminar, but I think we will definitely do a seminar on that. But Tom, point and figure charts, Terry's asked the question, and it is a good point to ask. How you used to use point and figure in the syndicate, Wyckoff used point and figure. We actually have point and figure in the software, but I don't use it. I'm just starting to learn it myself. Tell us about point and figure and how it works.
Right, point and figure. Yes, it's a very good index that you could take what they call a count, but you still need to be able to read the daily chart, which we're looking at, because you need to identify where they came into the market, in other words, stopping volume, and then you go over to the right-hand side of the chart, and eventually you'll have what they call the last point of support. In other words, it's usually a nice little dip down, and off they go. You take a count across there, and it will give you what we call an objective of where that's going. And very often you take the count, right, and you think, ooh, I don't think it'll ever go up there, but it always does. It's amazing how they work. It has been described in the past as, imagine going by a building site on your way to work, and there's a guy there with a little hut, a wheelbarrow and a spade, digging around. You know that there's not going to be a very huge building there, because if there was going to be a big building, you'd see bulldozers and lots of men working in a deep, deep hole and so on. Then once you see that, then you know the building's going to be sizable. And it's like charging a battery for the next move. It's been described like that as well. The count will give you the amount of energy that's been put into that stock or vehicle, whatever you're watching, for a potential up move. Or if you look at distribution for a down move. And it does work. It's amazing, really. But I used to draw them. Not only did I draw 12 charts by hand, which you could do fairly quickly if you've got the data. Doesn't take long. But you also do a point and figure chart as well. And the syndicate boys wanted to see a point and figure chart. Definitely. And so I used to do it. Doesn't take long. You soon get experts at things like that. You've got a nice big desk. You've got the data, which is the main thing, and so on and so on. But that's a point figure chart. Now, we did have one in the early versions of this software. Gavin says it's still there somewhere, but I haven't looked at it, to be quite honest. But I remember when it was first developed, there was something wrong with it I didn't like. Therefore, I lost enthusiasm about using it or talking about it. Because these programmers, they don't know anything at all about point and figure, you know. No, nothing at all, most of them. They just logically do what you tell them, and they often get it wrong. But if we could ever get point and figure, it's definitely a very interesting chart to have because of these counts. But you still need to be able to read the daily chart to see on the point and figure where they first stepped into the market and what they call the last point of supply. for a count on the upside, and you'll be surprised.
Yeah, thanks, Tom. And we're going to have David Weiss at some point come in and talk a little bit about point and figure with a public seminar we're going to do in the next week. So come and look at that. Now, Graham, I want to answer your question. Graham said, I have a question that I'd ask publicly if I had a mic. What's the best demo account platform you recommend so I can get stuck into practicing? At this stage, I believe I know far too little to risk the cash I've slaved for. I agree with you. So that's fine. If you're new to this, Graham, you've got to practice. I totally think that's a thing. And now I learned on this platform here. This is the platform that I learned on. Okay, it's the Infinity AT charts. And I learned by using that, this dome that I've got running here. Okay, just so you know, you can run in a demo mode. So let me close it out. Okay, because I'm running live at the moment. This is a real account that I'm trading here. So I'm not trading anything at the moment, but let's just save it all. Yeah, interesting. Lance says keep away from demos, but you know something, Lance, to familiarize yourself with how to place orders and stuff like that, you don't have the emotion attached to the trade, Graham, when you're on a demo account. You just won't have the emotion. And that's, once your money's in the market, you're going to experience the emotion, I can assure you. Trading on a simulator and trading real money, okay, now you can trade simulated live here and it turns blue. So when I'm in live mode, you can always tell, by the way, if someone's trading on a simulator in this platform because it turns blue. Okay, I'll just show you, as you asked the question quickly, Graham, I know other people will be thinking about this as well. So now I'm in, the charts open as before, and I'll let those charts load in while we go through money management and these setups, and I'll show you actually how we place a demo order in practice. So you can actually see there's no money involved, by the way, and you get that platform for 30 days free. You don't have to fund an account, and because you're on this course, you get the VSA study that goes in it for 4 weeks, again, as part of your course fee. After that, if you want to keep it as well, we'll give you a discount on it. But you get the plugin for that charting platform free. The data is included. There's no charge for data. You get real live data for 4 weeks from the exchange. So you've got no data fee either. It's a great deal. It is a good deal. Yeah, it is a good deal. So now I love these. If I ever see that set up there, that's my favorite, really. I love bag holding, but you don't see them very often. Here, the bottom reversal we talked about yesterday, and then a test in a rising market. I've made quite a lot of money on that setup alone. Yeah, Lance, I agree. But this particular setup on setup 4, the bottom reversal, remember what that bottom reversal is going to be like. It's going to be a widespread down bar to shake people out, and the next bar is going to close on the high side. It's going to reverse straight back up, and we call that a reversal. And then, if the market starts to trend, just trade the first test. Trade the first test. Now, I'll give you Jim Cagnina's email in a minute, everyone. People are asking. Just keep with me on this. I just want to finish my thought here, and then I'll give you all the details before we go. So here, the selling climax, of course, there's no supply. You'll notice on all the trade setups, there's one thing that happens in common. It starts with Yao Ming bars. So please look out for them. It's the Yao Ming bars that attract our attention. And then we look for some sort of confirmation to go into the market. And it makes total sense. Remember, volume is activity. It's the activity of the professional side of the market. Now, money management. It's all well and good identifying a trade, but not every trade wins, unfortunately. I wish they did. I try to, when I take a trade, I'm then, as Tom said, one of my skills, if I have one, is being able to manage positions so that I don't lose money and I try to make money. And that means, like yesterday, okay, I remember someone emailed me and said, Gavin, you got out of that Australian dollar trade. You could have let it run. I could have let it run, but I'd have lost money if I let it run because it went up.
Is Yao Ming a VSA customer? Not yet, but I'm going to give him a free copy of the software if he ever wants it. So money management's important. So I start, and this is the most important thing. I never risk more than 2.5% of my overall capital. Yeah, TP, that's why I took my money. I was at a support level down there, and you don't want to let those things run when it's going to go. It looked like it was going to go back up because of buying. Yeah, and so that's why I'm saying. And I did see your email. I took some profit out the trade because I thought, you know something? Something's not right. They're buying down there, and we'll look at the trade and we'll look at what you should have done because, I've done that myself many times. I've let the trade run thinking it's going to keep going, and they mark it straight back up again for more selling, which is exactly what they've done. They've marked it up to the round number today at 1.299. Big bout of supply on the euro. Same on the Aussie. So we've got to watch that. But that is the key. I'm not risking more than 2.5%. If I take more than one position, so I'm trading, say, 2 or 3 positions, which I don't often do, I'm not risking more than 6%. So if I'm wrong, I've still got an account to trade with. I will close a losing trade quickly and treat it as a cost of doing business in the market. I will never, never take a loss personally. Don't get angry with the market. I used to. It's pointless. All it will do is make you frustrated and your human emotions take over, and then you make bad decisions. Keep calm at all times. When I was trained as a police officer, yeah, and I was, I had to be calm in very difficult situations. In trading, there are going to be times when your human emotion will take over. That's guaranteed. I guarantee at some point you're going to feel anger, you're going to feel confusion, you're going to feel elated when you've made a lot of money, you're going to feel frustrated sometimes, and they're all feelings that come in. Trading is a business, and managing the trade is what I learned is the key skill of a successful trader. Now, Tom, you've actually said that one of my skills, in your opinion, apart from reading the charts, is managing a trade. Can you talk a bit about that and why trade management makes a great trader?
Well, Gavin's not frightened to go in when he sees what he interprets as one of the principles, right? Now, if he's made a mistake, and if you see a principle that's bullish, then you would expect the market, and the words expect the market to go up afterwards. Now, if it fails to go up, then that's almost like a failed test. There's something wrong there. And he certainly will close out a trade pretty quickly if he's got it wrong. And that's a key to success. Poor traders will pray, they will hope, they will wish, and no end of things going on there, hoping that market's going to reverse and go up to get them out of trouble. But as we see with the trending system, that rarely happens. If you're locked in a downtrend, those red bars keep monotonously appearing. Bang, down, down. If you do get an up bar, it's a narrow spread up bar, right? A blue bar on no demand, and that's the hallmark of a weak market. But Gavin never gets into that state because he closes the trade out, and that's very, very important. If you see a principle, you know that the market should respond in a certain way to that. I mean, I'm looking now to see what that euro done. And surely, we looked at it earlier this morning when Matt was here, and lo and behold, we saw stopping volume. We saw a spring or test shakeout, and to be quite honest, it's been going up, up for the last, it's come off a little bit now because some high volume appeared on that bar. It's actually got a signal. What's that signal say, Gav?
Supply coming in, number 26.
Yeah, number 26, supply coming in, which is true. It's pretty obvious. Massive high volumes, and that bar closed top quarter, off the top quarter. Only one thing can do that. After that move, supply has hit the market. And that's why it's come off for the last hour. Not a lot, but it's come off, definitely. You wouldn't want to be in long on those with weakness like that behind you. Definitely not.
Okay, and for those of you that want to try the Infinity platform, I've just put in the email of Jim Cagnina. Please put in the headline or the subject line, Trade Guider VSA demo. Okay, and then I'll speak to Jim. They will send you a link to download the Infinity platform, and then I'll get Ken to email all of you a link to download the VSA add-in study. And it's free, by the way, for 4 weeks, the platform and the VSA study. There's no charge at all. Okay, so going back to trade management. Always close a losing trade quickly. It's a cost of doing business in the market. Don't take losses personally. Okay, you're never going to be 100% right. Even Tom isn't 100% right. He's about 99.1. right, Dallas? Yeah, or do you think Tom is 100% right?
I think he's 100%.
Oh, okay, Dallas thinks he's 100%. You're law. Never get angry with yourself because you've made a mistake. It happens. Learn from the losing trade. Don't dwell on it. If I make 3 consecutive losing trades, I stop trading. Something has gone wrong with my plan. I do not revenge trade, and I do not hit the reverse button, Seneca. That's a good one. Do not, if it's going, don't suddenly hit the reverse button, because you think that happens, and you can actually have the whole thing go against you. I will allow a winning position to run using the chandelier. Now, yesterday, I closed the trade, and I'll show you why. I didn't let it run. And actually, I made the right decision as it happened because the market reversed. My key objective is to get my stop to break even. And obviously, once I'm there, I don't want to get stopped out. I want to make a profit. A minimum, I want to, if I'm risking $50, I want to make 100. That's a minimum. I evaluate my trades every Saturday, and I look at what I did well and what I didn't do well, and I evaluate it. And then final thoughts from some experts here. Most people, says Warren Buffett, get interested in stocks when everyone else is. The time to get interested is when no one else is. You can't buy what's popular and do well. And that summary is perfect for the gold charts. Richard Ney says, in which it is shown that if you scrap traditional approaches to the market and attack the financial conspiracy with its own weapons, you can beat the stock exchange insiders at their own game. We are giving you the weapons to do that with volume spread analysis. And if it wasn't for Tom Williams, this would never be out there. The story's told. Oops. This is one of my favourites, this is. The story is told that after he'd been deported to Italy, infamous New York City gangster Lucky Luciano granted an interview in which he described a visit to the floor of the New York Stock Exchange. When the operations of the floor specialists had been explained to him, he said, terrible things happened. I realised I'd joined the wrong mob. That's a true story. 6th of May 2010, the Dow drops 1,000 points in minutes and all the stops are caught, but most stocks do the same thing, and all is blamed on a fat finger futures trader trading the CME E-mini futures with 16 billion contracts. Maria Bartiromo on mainstream television, and let me just put her full name in there, Maria Bartiromo stated what's never said on the mainstream media. This really sounds like market manipulation to me. This is outrageous. True. Headline, MSNBC, 21st of November in 2010 was, everyday investors wonder if markets are rigged. Well, they are. I will not get sucked into buying market tops and selling at market bottoms because I know the intrinsic relationship between the imbalances of supply and demand and the footprints left by the smart money. I know the game on Wall Street and I will win it every time I trade or invest. Fail to plan to fail. I will follow my plan and adapt the plan as necessary to current market conditions. A plan is work in progress, just like living life, so I will treat each new trading session as a new opportunity. And here's Tom's simple rules. I will look for any key VSA principle that shows that a market is undergoing heavy accumulation or distribution by the smart money, or professional money as Tom calls it. I will trade any market, and Tom does. Anything he sees a strong principle, he'll tell me to go and have a look at a short or a long. And of course, the strongest principles we've already talked about. The end of a rising market. These are Tom's favourites here. Okay, end of a rising market, buying climax, up thrusts, they're all good. To go long, bag holding, selling climax, bottom reversals. And always keep this in mind. I'll immediately close a trade if it starts going against me because I got in too early. I always use a stop loss in the market. I will stay in a trade until I see an opposing principle that will stop the trend trade that I'm in. I don't ever get emotional about my trading, and Tom doesn't. I know I'm not 100% right, but I'm very close. I enjoy helping other traders and investors to learn the 30 years of knowledge that I've gained. All the principles that you can see on a chart in hindsight will have been there in foresight. So believe in VSA, and you will not go wrong. Okay, so let's go and have a look at the charts. And very quickly, let's show you, I'm not taking a real trade here, okay, but let me show you what would happen on the demo platform of Infinity. Okay, so we go and look at the euro, okay. This is the charting software. These are the VSA signals that are built into the platform. You can see they come up with a dialog box here. And if I left click them, you get the same dialog boxes that are built into TradeGuider. So this is how you learn. This platform is provided by Infinity and Transact. They're a futures brokerage firm based out of Chicago, Illinois. And the guy that owns it, Jim Mooney, is one of my best friends. So that's why he will look after you. He'll take care of you. Someone says you can't see it. Can everyone see my charts? Can everyone see my charts? Great. Thank you, Daniel. I appreciate your comments. That's very nice of you to say so. Good. So here we've got a principle, haven't we? Supply coming in. So let's assume I want to take a trade. Let me be clear. No, you can have this and I use this and TradeGuider actually, but no, I mean I use TradeGuider for many reasons. This is not as expensive as TradeGuider because there's not anywhere near as much in it. But for those of you that are starting and learning, this is a great place to learn the VSA system. So I want to place an order now. Okay, let's say I want to go short. The contract is the 6E. Now here is a list of contracts that you can practice on. There's loads of them. The crude oil, gold, all of them, sugar. There's the YM, which is the Dow. But I've got here the 6E. So I left click where it says D for dome, and it brings up a trading ladder. Okay, and let's just, okay, there's no, I may not be getting data on that. Let me just see if I'm getting data on the other one. Bear with me. Yeah. Okay. Looks like for some reason my firewall has blocked the data. All right. I'll have to demo that tomorrow to you. But anyway, what you do is you bring up the trading dome and you say, I want to place an order to go short. I wonder why that's. Oh, I see what it is. Yeah. It's the. Okay. Bear with me. I know what's happened there. It's being blocked on the firewall. So I'll come back to that. Okay, so let's go and have a look at the chart. Now, let's say we're looking at this Euro chart. Now, Tom wanted to talk about this because he was watching the E-mini, but this has also got a serious amount of supply that's hit the market. Okay, just here. And then we've had a gotcha bar, widespread down, took out this support line, and it looks like it's trying to go up on no demand. So there might potentially be a short trade here. Tom, the Euro, we looked at it earlier. I know that you saw that supply because you shouted over me to try and take a trade there. Do you want me to pull the chart up for you?
Yeah.
Can you take your magnifier off? And we'll look at the 15-minute chart. Here it is. Now, do we have a trade here, Tom? Here's Tom looking at the Euro.
Right, well, we obviously had a trade this morning. We spoke about this as you tuned in at 12 o'clock. I've been looking at this Euro and we told you we saw stopping volume. We saw a down move, then we saw stopping volume. They got the chart up, Gav?
Yep.
Okay, then the chart churned sideways for some time, right? There's some mostly fairly strong bars in there, but we haven't got time to discuss all those. But here is what Wyckoff called a springboard. Right at the end, just before the up move, right? I just call it a test. But it is a test. It's a shakeout, really. And I never really used the terms springboard and all that. I just wanted to call a spade, and it's really a shakeout just before the up move. And I said expect higher prices, and we have seen higher prices, right? However, at that point there, we saw our classic sign of weakness. Here, Gab, up bar,
Yeah.
very, very ultra high volume.
I'm just changing over to the other computer, so bear with me.
So he's just changing over. But we know markets do not like ultra high volume and up bars. And if you're long, right, it's well advised to close the trade
I
out
think
when you
there's a
see.
short there on that no demand up thrust on the back bar. Look at the black bar.
Now we've moved over. But there's the first sign of weakness, right? As we move over, we do in fact see no demand on these blue up bars. That's no demand there. Although the computer hasn't coloured it pink, it is low if you look at it. And it's fallen a bit further, and now it's, well, at the moment, as you say, it looks like no demand, but I don't see any solid area where you go in. I would like to go in at the top there, on that top there, or at least on the first blue up bar on no demand.
Okay.
It's all there.
Yep, it certainly is. So yeah, what Tom was saying here, there's your ultra high volume bar. We've made a high low. We've got a mark down here. Now, if this goes up in the next 13 minutes and it's no demand anywhere up here, there's very good chance I'll try and take a short trade there. If we have a look at the bigger picture, we're in a downtrend, aren't we? There is some support here. Look, a little bit of buying that came in, but that bar there, although it drifted the market up, it's still a gotcha bar in my eyes. It took out all the support. So we're back up to this level on high volume. And if we go up there on no demand, I think that would be a great trade to the short side. Michael, probably speak to AJ. Speak to AJ. Because if you're using eSignal, you're in a different part of the world. The data packets that are delivered from eSignal will be slightly different than the ones I get. But look at the bars in isolation. That's what I do. There's the supply hitting the market. It knocked it down. Now we're looking for it to go back up to that level on no demand and change behavior. And then what you want to do is look at a 5-minute chart to see if you get any confirmation of that going on. Okay, great. All right. Okay. Perfect. All right, good. Okay, so yeah, if you want to get the demo platform, which has got the charts in it and everything, you speak to Jim or just email j.cagnina at Infinity Futures, mention my name and Trade Guider, and say you want to get the download of the demo platform. It's free. He'll send you a link, okay? And then we'll get Ken to send you all a link to download. In fact, I'll just email you afterwards. I'll get an email out to you all with the download for the VSA studies that go into Infinity Charts. Okay, and yeah, I'll certainly, let's see if I can bring up the 6A. I'm running a firewall on the second computer, and for some reason it doesn't like, okay. Okay, so this is the 5-minute chart of the Aussie, which is still going up to that nice round number at 1.03. It did hit the target yesterday. It went down to 1.02, so they've marked this up. Now, do we see any serious signs of weakness here? I certainly wouldn't want to be short on this contract at the moment because it's pushing up, and it could easily have another surge in volume. So I probably wouldn't want to be looking to short the Aussie at the moment. Even though I did yesterday, we ended up getting out. And the reason we got out, okay, and you all saw me get out as well, was if we go to the 15-minute chart, okay, and you'll see what happened here. So the market came down to this round number. Now, these round numbers, you start to see professionals supporting the market, and we did. There's a lot of volume on their down bar here. You've got 4 indicators, but we're still the diamonds were still red at that point. But suddenly, we began to make higher lows on the bar. And then here, we had a test. And as soon as that responded positively, I didn't even think about any more shorts. Now, could I have gone long in here today? Possibly. But now we've got a line and the market's been marked up through it. The volume isn't massive. If we're at this round number, wait for the change in behaviour is what I would do. Wait for that change in behaviour. Lance, you've got a question? Yeah, your mic's open, Lance. Hello, mate.
It's regarding the AT Infinity Futures stuff.
Yeah.
Maybe that dome.
Yes.
Is once you place an order on that, there's no humans involved.
No, that goes direct to the exchange.
Right. Okay. Brilliant. The next thing is, I pay approximately £200, including the VAT, to eSignal.
Right.
Am I right in saying if I switch to this Infinity Futures, incidentally, I am actually very keen on trading the futures, so I am thinking of rejigging my eSignal subscription.
Yep.
If I switch to Infinity Futures, am I likely to be have a subscription with all the data, real-time data, for a lot less than the £200 a month that I pay?
What you can get if you fund a live account with Infinity, you will get an opportunity to get your exchange fees waived by the exchanges. So you will save some money there. But I still use both. I mean, because at the moment, TradeGuider only works with eSignal data. It doesn't work with the data coming from here. In the future, it might do, but at the moment, it doesn't. So it only works with, TradeGuider real-time, the real-time software. From a data, so it's real-time only I'm talking about now, only works with data from eSignal. Okay, and also I think works with another company, Real-Time Data, but I don't use them. It's eSignal data. So you would not be able to power TradeGuider with data from this supplier. Just it won't work. We've tried. Now we're trying to fix that in the future, but what they provide, this company, Infinity, have their own charting package, which is this one, and we've built in some, not all, some of the features that are built into TradeGuider. For instance, you don't have the scanner in this. Hence the price difference. There's a big difference in the price. But if you want to just try this for 30 days, a lot of our customers are using both side by side. I do. I use both. You know, so
Where does the data come from?
This data here is coming direct from the exchange via a company called Transact, which you see up here. You see it says Transact. So that's coming from the eSignal's data comes via their servers. So they take it from the exchange into their servers and pump it out again. This actually comes direct. You'll find as well that the, I like to use both as well, because when the market's moving extremely quickly, which it doesn't do very often, you'll find that you'll get setups on here. I mean, for instance, today, this was the sugar contract, which I was going to talk about later tomorrow. But what you'll see is I've got here the 15-minute chart of sugar, and there was loads of good setups all the way down here. But I don't subscribe to intraday sugar charts in eSignal because I don't trade it much. But I can get this through Infinity, and as long as I trade 10 round turns a month, you don't pay for the charting.
And the charting is real-time, proper volume like eSignal would be. And as long as I trade 10 times a month, I don't have to pay no money.
Not for this data, no. Not for the Transact data. No, I think it's 10 round turns. But what you need to do, Lance, is email Jim Cagnina, mention my name, because you'll get good service and they'll probably do you a good deal on the commissions. And just say to him, could I get a demo of the platform and could you assign me a rep to talk to? And they'll give you all the ins and outs. They're good guys over there.
The data and the signals, it really confuses me. I don't know what's what with it, to be fair.
Well, okay, I'll just be very simple.
That's why I thought I'd ask you to.
Yeah, good question.
as far the way I interpret this Affinity Futures, I've been looking on the internet. The way I interpret it is, it's basically a broker that TradeGuider sort of plugs into. However, they give you your real-time data and charts free of cost.
As long as you take 10 round turn trades a month and you fund an account with them. You have to fund an account after 30 days. So you have to physically fund a live account. Let me tell you the difference though, Lance, and explain to you, because it's a good question. What's the difference between the TradeGuider platform, which has got the scanner and all of that, compared to another charting package? Well, look, there are hundreds of charting packages on the market. There's NinjaTrader, there's TradeStation, there's MetaStock, there's MetaTrader 4. They all do much the same thing, in that they provide data for you to read as a trader, and they provide different tools. They have MACDs, stochastics, moving average. Now, we have a charting package called TradeGuider, and that was the original work of Tom Williams, and we have and own the intellectual property for the volume spread analysis indicators and several other things that other platforms don't have, like trend clusters and the scanner, for instance, which identifies the volume. Now, we got approached by some programmers at Vegas a year or two ago, and they said to me, look, there's a lot of people that want to use VSA in the platforms they currently trade with through their brokers. So we said, okay, can you program it? And they said, well, we'll show you. So they programmed the VSA signals into a platform called MT4. Now, there's a lot of things they couldn't program, like the scanner, the trend clusters. There was a lot of things they couldn't put in. But we decided to just put in some of the key things that I use, which is the diamond trending system, obviously the VSA indicators, which you see, the H-stops, which are the stop management system, and the medium-term trending system, which are the coloured bars. And obviously that reflects in the price, because the plugins are less expensive than the TradeGuider full software. Now, the TradeGuider program, the real-time version you see on your screen, only works at the moment with one date or two data feeds. Okay, it works with two. eSignal is the one that I use. They're the main one, and there's another company called Real Time Data. I think they're all about roughly the same price, but I use eSignal because they're a much bigger company. And that's what this. So if you had TradeGuider Real Time, you couldn't use it with other data feeds. It only works with those two at the moment. Now, what we've then done with certain platforms, and you can go to our website and see which ones they are, is we've decided to plug our signals in. Here's an example here in Sugar. So that everything you see here, the red bars, the red diamonds, the signals, are all proprietary to TradeGuider. We own that intellectual property, and we lease it to these companies. Now, what happens is they have an interest, because they're a brokerage firm, in having customers trade with them, because they make commission. That's how they make their money. So what they do is they provide their charting software, which in this case it's called Infinity, to customers that fund an account free of charge. As long as you trade 10 round turns, which is nothing, you get the charting. As part of your course fee, what we said we'd do is allow anyone that's on this course to download and install these indicators in the platform free for 30 days as well. So you can have a look at it and see if it's something you want to stick with, or see if something you don't want to stick with. But I know several of the customers in this room have got TradeGuider Real Time, and they've got this platform as well. And there are a lot of benefits to that. I mean, because you can look at multiple time frames.
Then, right, okay. So it's delayed data.
No, real time. This is live. No delay. No delayed data. This is actual coming from the exchange right now, live.
If I said to you that, let's say RG Index or Central Markets, their charting package, their platform, would you say that was real-time data?
Sorry, say that again.
You know, the companies like RG Index or Central Markets, would you say that their platforms and their charts were real-time or delayed?
I have no idea. You'd have to ask them directly. I have no idea. I don't.
You know about RG. Surely you'd know about RG Index.
I know who RG Index are. I don't know what platform you're trading with. I don't know if they're sending you delayed data or real-time data. I can't.
All sorts of platforms, mate.
Well, yeah. Well, you need to.
I don't know whether I'm coming or going with half of them.
Well, first of all, you should ask the question of the broker that you're dealing with. is my data real time or delayed? That you've got to, because if it's delayed and you're making real trading decisions on it, you're going to lose money. So you don't want to use a delayed data platform. Okay, everything I've shown you today on these charts is real time live data. I pay for eSignal live data. I don't pay for delayed. Delayed works great for practicing on if you want to practice, but not for real.
That's what I feel that when I first started, or the brokers that I'm using, their data was delayed. That's why I knew VSA, I had to have real-time data. That's why I subscribed to eSignal.
Yeah.
Also, it plugged into the TradeGuider as well. So I sort of use the eSignal from a real-time. I don't really take much notice of the platform charts and information it gives me. I just place my trade through it, but I use eSignal for the timing. So this Infinity Futures, then, it's going to be real time. I can place my trade through. I can do it all on the one like you do. Correct. That's all right. I'm just waffling on now.
No. Good question. And Michael, actually, one of our customers in here, has said IG Index, and you must know this, is a spread betting firm, and you're not getting real prices. You're getting their prices.
Yeah,
which is true. So let me just tell you a little story, because it's important you understand this. We did a presentation in Australia, right? And a guy that was a market maker for a forex company, who's a friend of ours, came to talk about, and he now runs a company that gives what we call direct market access, which is what Infinity give you. But you've got a lot of firms out there that basically give you their prices. So when you're spread betting or you're dealing with a spot forex company, what they can do, and this has actually been proven they do this, is they'll look at all of their charts and their screens, and they'll say, oh, you know something, we were given a 3-pip spread on the pound, but actually I can see this customer's making a bit of money. I'll widen his spread by clicking a little button and stop him out of his trade. That actually happens. It's illegal, but it does happen. With benefit of trading the currency futures market, is it is transparent. You are dealing direct with the exchange, and you can't, and there's no one looking at the other side of the price. So the reason I trade currency futures and not the spot forex market is I'm getting the exchange prices directly, and it's a much fairer system. And I also have protection to some extent that if I have a complaint against the broker, I've got somewhere to go. It's called an NFA. I've never ever had to complain about any of my brokers. I've been lucky, apart from PFG, which stole my money. But other than that, not a lot I could do about that. Yeah. But with the brokerage firms, if you're gonna have an account somewhere, you need to protect it as best as possible. And I would say that, you know, I've been trading with Infinity, and Tom has as well, for 10 years now. We've had our accounts with these guys, and they're a very reputable firm, you know. But again, I have to say, you've got to be cautious with that statement. I also had an account with PFG and thought they were a reputable firm, and a few months later they went out of business. It's what happens.
It's a lot easier to learn all the principles than it is to get my head around the data and all these platforms what are out there.
Yeah, I'll tell you how I learned, Lance. This is how I learned. I started with TradeGuider, with our RT platform. I then got this platform you're seeing now, the Infinity platform, like this. That's all I started with, nothing else. I then had the demo account. So this is a real account. I was a demo account, and I would then look at the charts, take a trade, take a screenshot of what I was doing, look at it, see if it made money, and then go back and say, if that one made money, I'm going to put it in a little filing thing. I've got a big set of files. And if it didn't make money, I threw it away. Guess what happened? Yeah. After a month, I had about 15, 20 charts, okay, because I didn't take lots of trades, but there were ones that made money. And guess what? I began to see the patterns. And suddenly, I built a trading plan because I was actually able, luckily, I'm very lucky, I can sit next to Tom and trade with him. So suddenly, I realized that what I'm looking for here is patterns. I'm looking for chart patterns based on volume. And I've studied something closely called NLP. I don't know if you've ever heard of that, Neuro-Linguistic Programming. It's how the brain searches for information. And I learned, and Tony Robbins and others teach this. And I realized that trading, good professional traders, the ones that I've met, are looking for chart patterns that make sense to them. And then once they make sense of it, they take the trade. And then if the market doesn't do what they expect on that pattern, they close their trade. If it does do what they expect, they make money. And that is really what trading is. So what you're looking for It's chart patterns that make sense. You expect the market to fall after the end of a rising market. You've seen the signal. You've got your no demand bar. You've gone short. Now, when you've shorted, do you know that an upthrust is just round the corner? You don't know if they're going to do that. Do you know if you're short, there's going to be a gotcha bar and you're going to be short as they collapse the market? You don't know, but you manage your trade. If the market's upthrusting and you're short, you close the position. If it starts to go against you, you just close it out. But if you're short and it's going with you, you start to move your stop down. Now, this platform here that you can practice with, they do a weekly demonstration. And what I'm going to do actually on Friday is I'll have one of the guys come in and give us a 15-minute demo of how to use the platform and how to place orders and stuff, because I've had a lot of people ask about it. And maybe on Friday before we'll actually start a little bit earlier. And if you're all interested, I'll have one of the guys come in and show you how to use the platform if you're interested. So let me know.
I'm very interested. I'm interested, but I'm more interested in trying to find a cost-effective way of getting real-time data and giving me sort of a broad look at all the markets. Now, I understand that AT Infinity, they're just like specialising in the E-mini S&P, which is fine at this stage. But as I progress through my trading career, obviously I'm going to want to look at other things as well, which Affinity Futures ain't going to be able to help.
Well, hold on, Lance, let me just clarify something for you. They trade all the futures markets in America. So that is not just the E-mini S&P. Gold, silver, pig bellies, the whole lot, everything.
But they don't do the FTSE, do they?
Nope. They don't. They're not a UK-based company. They're purely American. If you want to trade the UK market, I would recommend you look at a company called FP Markets. That's who I use. They're very good. They do London and Australia. Yeah. So again, it depends what you want to trade. If you want to trade the American markets, go and look at a decent broker in the US. If you want to trade the UK markets, as I say, I've got accounts with several companies. I've got FP Markets is where I put my, I trade my my currencies. And also with Infinity. But Infinity, as I say, it's your choice. I know it's confusing.
That's part of the problem I've got at the moment. I don't actually know what I want to trade.
That's a separate issue. I mean, what you've got to decide over the next few days, and, wait to get to the end of the mentorship course. And I know you and I and Tom are due to speak probably early next week. Don't worry about what you're going to trade right now. Don't even think about it. Okay? Just forget that.
All I've got at the moment is spot gold. And I understand the patterns. It's making money. And I've not, that's all I'm tied to at the moment. But I know that there is other things out there, but I don't know what to trade. But at the moment, it's just spot gold. I'm spot gold Mac.
Yep. Well, look, let's talk about that. So you're right. I mean, Manshas is saying this is not necessarily something for the mentorship course. But by the way, just so you know, we are overrunning by now. No, I quite agree. Look, the point is, what I want, your questions are the questions that people want to ask, and that's a good question.
I'm a novice. I am novice. I'm raw talent because I've never done this before in my life.
And I think you'll find several people in here are the same. There's others.
So, these are good questions because I'm not a stupid person. And I know this is literally somebody talking to you now. I have had no experience in the markets whatsoever, so I'm sure these ain't going to be questions that you've never heard before from other members as well. So
no,
might be a bit boring, but for me it's vital information. I've got you here on the screen, so I'm just keep.
I totally agree with you. I want you to do that because at the end of the day, as I've said, no question is a dumb question. We have overrun today, so we've already done everything we needed to do from a VSA point of view today. We've done the trading plan, we've looked at the charts, but we were asked about the platform, and you're absolutely right. There's a lot out there. Where the hell do you start? And what we'll do is on Friday we'll start a bit earlier, and I'll have one of the guys from Infinity come in, or maybe towards the end, and come in and just show you the platform, and you can all make your own decisions accordingly. But no, great question, Lance, and obviously we'll touch bases again tomorrow. Let me just close your mic off. Okay, everyone. All right, let's. Sorry we've overrun. We're an hour over, but again, I hope you've enjoyed today. I'm going to wrap it up now because Tom's getting very tired, needs to go and have a sleep. But we've covered an awful lot today. We've met Matt James, the Forex trader. We've obviously had Tom looking at the charts. And that's funny, Morris. But yeah, look, I encourage you all to ask questions. That's, as I say, some of you are using the microphones, some of you are using the typing. But again, the whole idea of this mentorship course is that you, at the end of Friday, have learned a lot of information that can help you. And every single question is a good one that I've had so far, and I encourage them because that's what it's about. It's about learning. So on behalf of Tom, myself, Matt, and everyone here at Trade Guider, have a really good rest of your day. Hope you enjoyed today, and we'll see you the same time tomorrow. And remember to email Jim Cagnina, j.cagnina @Infinity Futures, and he will assist you with getting set up with the platform. Take care, everyone. See you later. Bye-bye.